Welcome everyone. I'm actually gonna wait for a few minutes. Welcome everyone. Obviously, I'm gonna wait for a few people more to join because we are expecting a lot more people to join. I think there's well over 150 people registered, so we normally tend to expect between 35 to 50% turnaround. So we'd expect between 50 to about 80 people to join us today, depending on the time. So we're going to wait for a few more people to join us. But do share your journey with us. CJ has written, I have a digital marketing business helping small business owners with effective marketing strategies. Definitely a business to be in at this moment of time. Keen to learn about the world of property investment. Very new to me. In this session, you're going to learn about social housing. You're going to learn about buy to let. You're going to learn about how to find below market value properties. You're going to learn about rent to rent. You're going to learn about due diligence on properties. You're going to learn how to source properties. You're going to learn a lot more in this session. So stay with us till the end. In fact, this is something for everyone. Stay with us till the end of the session, and we will give you gifts that will help you grow your portfolio and your property business. So stay with us till the end of the session. In the meantime, share your journey, share your challenges with us. What are you struggling with? How is COVID affecting your business? How is everything else on your side? Tell us a bit more about yourself. We have some amazing entrepreneurs and speakers for today's session. And I'm going to start introducing them in the next few minutes. But till then, I'm just going to wait for a few more people to join us. I see a strange grin on the face of Jasim. He's a PE representative. He's an amazing human being. If you don't know him, you need to know this person. He can help you with a lot of things, but he's got a very funny grin. And I'm just thinking, what are you thinking about?
I was just pulling someone's leg on the group. That's it.
Okay. But yeah, welcome, Kranti. I'm just trying to look through who else has joined us. We have Stephen. Welcome, Stephen. If you don't know Stephen, he is the CRM expert in property business. You need to know this guy. He's going to be speaking at today's session. So you'll be able to learn a lot more about systemizing automation from him. Alex, welcome. Arif, welcome. Bola, welcome. David, Geneva, Geeta, welcome. Kelly, welcome. Man, welcome. Lucy, welcome. Memory, welcome. I can only tell the names which you have as usernames on Zoom because that's what I see. Rachel, welcome. Shaz, welcome. It's a pleasure to have you on this event. We're going to start in the next 5-7 minutes or so. But till then, I just want to get to know you. Just need to see if you have any challenges. Do you have a burning question in your mind at the moment? What is it that you struggle with? What is it that's the biggest challenge in your business at this moment of time that we can potentially help you with? Write your question in the chat box, and then I will make sure to answer that question sometime in the midst of this event. We do these events once a month. Normally, we may skip a month in the middle if we are busy on the operational side of things, but we tend to do these once a month or sometimes once in 2 months. And the aim is to just add as much value to your life and to your property portfolio as we can. We tend to try and keep them for free, so we can help you in the process. We will definitely be, in fact, I signed up to the Facebook supporters program yesterday. So we will be creating some premium content, which you'll be able to get on my personal page on Facebook through the supporters program on Facebook. So we'll be doing that as well in the next a month or so. But we try and keep these events free for as long and as far as we can to help you build your portfolio. Hello, Arif. Thanks, Jack. Challenges to identify areas of around 70 properties, BTL, how to find motivated sellers directly. Finding properties close to 70,000 mark. There are quite a few areas above Manchester, sort of north, east and northwest that I can think of. You can get some really cheaper properties there, and the return on investment on those properties is pretty good, I must say. Either they are BTLs or HMOs or service accommodations that you can potentially take on, but you can potentially find them. Do send us a message and I'd be able to share some areas with you, as well as I will share with you some strategies on how to find motivated sellers directly. It's pretty simple, but you just do have to use those strategies consistently to be able to get motivated sellers leads directly. Struggling with connections to call keeps cutting me off. Sorry for inconvenience. No worries. Try and sort it out. This event will definitely add enough value to your business and to your property portfolio. And I can assure you that by the time this event is going to finish, if you are going to buy, let's say, £1 million worth of properties in the next 5 or 10 years, I promise you one thing, that by the end of this event, I'll be able to help you save at least 10%. So help you find below market value properties at least 10% to the bare minimum, which means if you're buying a property, if you're buying portfolio worth £1 million in the next 5 to 10 years, you'd be able to save yourself 100,000. If you're buying 10 million, you'd be able to save £1 million. And if you're buying sort of 100 million mark, you'd be able to save yourself 10 million just by using the tactics that I'm going to share in this session with you. So stick around with us. Like I said, we'll be giving out gifts at the end of the session, but that will be at the end of the session. So you do have to stick with us to be able to get those gifts. As well as the fact that, like I said, we're going to share some really good tactics for you to be able to find below market value properties. I may touch some points on how to find motivated seller leads. If you want me to, I can do that for about 5 odd minutes. I may not have any more time, but I will try and cover a little bit of that as well. House style, okay. Should I use QR code too? Definitely use it. We are sitting in a technology world, and if you are not using technology, something that I'm going to cover in a bit, if you're not using technology to leverage your business, you must. To be used everywhere, absolutely everywhere. We have techies everywhere in the world at the moment. And like I said, if you are not using technology to leverage your business, you are missing out big time. So like I said, this is one aspect that I'm going to cover for about 5 odd minutes on how to use technology. And we have Stephen who's going to share on CRM as well. But leveraging technology is a must. And you will probably see PEN leveraging technology very, very heavily. Most of what we do is digital. So to answer your question, it is definitely a must. You must use technology to leverage. Finding motivated sellers, direct best investment areas outside of London, and access to bridging finance as where my interest lies, Jack. Thank you, Rai, for your questions. Motivated sellers directly, I'm going to cover a little bit of that. It is a deeper subject and it requires a long time to cover everything, but I'll cover a little bit of that. Best investment areas. I always believe there are pockets, and you must always look for those smaller pockets of profitable pockets in your close proximity, because you know the area intimately well, and it just doesn't get better than that. Because if you go far away and you start looking away from where you are, you may not know the area well, which also always leads to making mistakes. And in property business, I always believe that you can get away with a smaller mistake or a learning curve. But if you make a major mistake, you can lose 5-10 years of your life just trying to make that money back. So I always say that stick to your close proximity and look for those profitable pockets. And when I say pockets, it's literally very, very small pockets. It can be one street that may be profitable. You just have to look a bit more closer. What kind of areas outside of London? I believe north, east, and northwest in the next few years are going to pay very, very well in terms of not just appreciation, but in terms of return on investment as well. Again, pockets. So you do have to find your pockets. And about bridging loans, pretty straightforward. After COVID, you cannot get any more than 65% leverage on a bridge loan. So that's all there is to it. Anyone who tells you otherwise, that they can get you more than 65%, I can assure you they cannot. As soon as they actually take your file and put it to a lender, the lender will always come back as a maximum leverage at 65-35 loan to value, and never more than that. Before COVID, you could leverage up to about 75, 72, 74, 73%. After COVID, the most lenders are sticking to a leverage of 65%. So at the moment, bridging finance sits at about 65% leverage. Again, if you want me to cover this in another session, I can certainly do that. How to source rent-to-rent properties, West Yorkshire. Sourcing rent-to-rent properties is a subject that one of our speakers is going to cover, Muzi. You can ask him this question, Geneva. How to research demand over supply, serviced accommodation. Again, this is something, a subject that Muzi may or send us a WhatsApp message, and we'll make sure to cover this in another video or in another interview for you. I'm going to give you my number to WhatsApp below. And send us a WhatsApp message, Deneve, and then we'll make sure to cover this in another session. But like I said, sourcing rent-to-rent properties is going to be covered by one of our representative speakers for today, Muzi. You can ask him this question when he is on. So now today's first speaker, I'm so excited to have her in our event today. She's actually very, very well known in the property circle as the person to go to when it comes to, she manages multiple properties. Last time I checked, she was managing about 60 properties, about 200 plus rooms. She may be managing more at this stage, but like I said, she's very, very experienced as well as very, very well.
Right, I don't know whether or not I'm supposed to be speaking because I've lost Jack.
Jack, we've lost you.
Shall I just start?
I think you can start too. I'm just going to message Jack.
Okay, cool, no problem. Hi, good to see everybody. It's lovely to be here and talk to you today. I had a problem last night with my webcam on my laptop, which is why I'm not going to have any slides to present, so you're just going to have me to listen to. Jasim, can you just give me sort of like a 10 minutes and a 5 minutes before I'm due to be running out of time, so I could just try to keep on track? Thank you, I appreciate it. Jack mentioned some numbers to you. So currently, my business, Genie Homes, manages about 80 properties that are used for social housing. We manage about 400 HMO rooms, and we manage about 60 single buy-to-let properties. And I've been investing in property for 30 years. So what I'm going to do in the first instance is just give you a little bit of background about myself and how I got to where I am today. So I bought my first property about 30 years ago. I was very, very fortunate. I came from a family where mum and dad had always invested in property, but only in a small way. Dad was really forward thinking. Back in the 70s and 80s, he was a student landlord. And that was back in the days before there was buy-to-let, before there was interest-only mortgages. But that's like why I got into property. And when I was 21, Dad found a shop with a flat above it and thought that that would be a really good starting point for me, because it was going to give us two different streams of income. We'd have rent for the shop and we'd also have rent from the apartment. So I went to see my dad's bank manager, and the bank manager said, "Yep, that's fine, Sue, we'll loan you the money, but we want your dad to be your guarantor." And I thought, well, if I'm going to do this, I want to do it under my own steam. I don't really want, if anything goes wrong, that my dad's going to step in. So I went to see Mr. Finn at Midland Bank. I can always remember it, all those years ago. And I had to present a business plan to him. And I was very, very fortunate that at the age of 21, he said, "Yes, we will lend you the money." And that was really where my property journey started. And I still own that shop today. And that is actually now where I run my lettings business from. We outgrew the shop downstairs, and we then had to ask the tenants to move out upstairs. So now we've got the shop downstairs, and we use the offices above as well. So that's where I started. After I bought that shop, I didn't really do anything for about 16 years. I had a really busy sales job, and in hindsight, I should have saved the money that I was earning. I was earning a fortune in sales. Even though I say it myself, I know that I was very successful, and I never really told my mum and dad that I wasn't saving my money and that I was spending it on all sorts of stuff. But I had a good time. But in hindsight, I wish now that I'd have saved more money and put it into property. So if you're in that situation, if you are in a job and you're earning really good money, please save some of the money and put it to one side for a deposit. You will really appreciate that in time to come. So what I've learned over sort of like the last 30 years, I just want to share some of that with you now. So over the last 30 years or so, I bought my first property about 30 years ago, and then didn't do anything for about 16 years. And then we gradually started to buy property. And I've now built that up to a portfolio of 42 properties. And I know that it's something that's not spoken about very often, but I made mistakes during that time. And I think it's one of the things that when we listen a lot to property people and people in property, people only ever talk about the very, very best deals they've ever done. They never really speak about things that have gone wrong, and things do go wrong. So I'm just going to share with you a little bit of where things have gone wrong for me, and hopefully it will help you as well. So I bought a traditional 3-bedroom semi-detached property, probably built in the 1920s, 1930s. I'm sure you can visualize it. It's one of those houses where you walk through the front door, you've got a staircase in front of you, and then you walk through to the kitchen, and then you've probably got 2 reception rooms downstairs, and then you go upstairs, you have 2 great bedrooms, you have 1 little box room, and you have the bathroom. So that was what the house was like. So we decided to do a 2-story extension on the side and a single-story extension on the back, which significantly increased the size of the property and was actually going to make it one of the biggest houses on the road. And everything was fine. We got builders in place, we'd got the funding, we knew exactly what we wanted to do with it. And then both my business partner and I split up from our long-term life partners and lost complete interest in that project. It was a project that we bought to flip, so we were doing it to quite a high standard, because we knew that we wanted to really get a great return on our money. However, because we just lost interest in it, we lost control of the builder, we lost control of the budget, we lost control of the time schedule, because we just literally said to the builder, just get on and do it. Now, under normal circumstances, that might have been okay, but we bought this property in 2007. And I'm sure that you're going to hear now what I'm going to say, and you probably think already what I'm going to say. We should have finished that property 3 months before the property market crashed. But because we'd lost control of the project, it wasn't finished. So after the property market crashed, we couldn't sell it to recoup back the money that we'd already spent on it. And partway through all of the build, we ran out of money. So we then had to borrow money from friends, family, everybody to get the project finished. So what I would say to you is, property is a business. And regardless of what you have going on in your private life, you have to treat property as a business. And if we'd have taken that attitude, we would have finished that house before the market crashed and we'd have sold it. Now, there's not all bad news about this house, because that house has always achieved the highest rent on the road and the highest rents for the area. We still own it now. And if we sold it now, we could actually recoup back all the money that we put into the build and a little bit more. So there's a good news story at the end of it. But if we'd have treated our property business as a business from the outset, we would have had a very, very different outcome on that. So remember, property is a business. It's not something that you're playing at. The next thing that I'd like to share with you is sometimes it is better to lose a small amount of money at the beginning than lose a bigger amount of money by holding on to a property. So we put £1,000 deposit down on an off-plan city centre apartment. This is the apartment that the apartment block was in Birmingham city centre. And the agents told us when we rented it out that we'd be able to achieve between £900 and £1,200 a month for it. This is going back to 2004. And we put down £1,000 holding deposit. Now, we knew that £900 was still going to be unachievable. And we calculated all of our figures on getting a rent in of £800 a month. And we thought if we get £800 a month, it works. So that would be fine. When we completed on the property, the rent that we achieved for it back in 2004 was only £550 a month. So way, way, way lower than what had ever been estimated for the property. And out of that, we were paying our mortgage and our service charges. So we were actually losing money every single month on that property. Now, the lesson that I learned from that is we shouldn't have been pig-headed. We had a feeling that the property was never going to work as well as we'd been told it would. We didn't realise initially it was going to be as bad. Even now, so like nearly 20 years later, that apartment still only rents out for about £900 a month. So it's just never really performed very well. We should have walked away from £1,000, the holding deposit that we put down on the property, but we didn't want to lose that £1,000. But actually, over the last 17 years that we've owned that property, we have lost tens of thousands. So again, sometimes just work out your numbers. If something doesn't feel right, it's better to walk away from that small loss than it is to walk away from, so like do what I've done and end up with a much, much bigger loss all the way through. So then the other thing I would say to you, because I know that not everybody invests close to home, I'm really fortunate that I do invest close to home, and it means that I've got to know the area where I invest very, very well. And I know that I've made decisions purely based on a gut instinct. So I bought 3 houses about 2.5 years ago in a B1 postcode. That's the best postcode in Birmingham city centre. It's the one that's closest to everything that you want in the city centre. But these houses were on an absolutely diabolical estate. And all my friends were saying to me, why on earth are you buying those properties? I had an instinct that the value of them was going to go up. because all around that estate, there are new build apartments being built. So at some stage, that estate has got to improve. After 2.5 years, if I go onto that estate now, if a property comes on the market for sale, I cannot buy anything for less than about 185,000. I paid between 135 and 140 for those 3 houses. So in 2.5 years, my instinct has come true. So if you are investing outside of your area, you need to do lots and lots of due diligence. You need to understand, are you buying property for cash flow or are you buying property for capital growth? And you need to do all that due diligence on the area that you're going to invest in to make sure you know what are the good areas, what are the bad areas, what are the areas that you should avoid at all costs. And if you can't find out that information yourself, you need to find somebody who is an expert in that area that you can then work with. And I think that again is really important. The other thing as well that I always say to people that is very, very important is that you actually understand the different exit strategies that you've got with a property, and that you understand the numbers and you understand how hard your money can be working, and then you can make the right decision about what you want to do with the property. So I bought a house, we probably bought it about 3 years ago now, and we can have a choice of what we did with that house. Either it could have been a 6-bed all-en-suite HMO for working people, or I could have used it as a 5-bed, 2-bathroom property for social housing. Now, I'd always thought up until this point, the only thing that was important in buying a property was the cash flow that you were going to get from it. I never really sat down and worked out the return on investment. And the return on investment for me, now that I understand it properly, is how hard is your money working? So with this house that I bought, I could have spent £60,000 to transform it into a 6-bed all-en-suite high-end HMO, or I could have spent £18,000 to turn it into a 5-bed 2-bathroom property to use for social housing. Now, when I worked out then the return on my investment, so I worked out my return on the money that I was going to be leaving in the deal, with both of them, so like on the 6-bed all-en-suite, that was going to give me about £10,500 a month after I'd paid all the bills, after I'd paid my mortgage. So that was my cash flow. So we're not £10,500 a month, £10,500 a year. And on the 5-bed 2-bathroom option, I was only going to get about £9,000 a year. But when I worked out the return figure, based on how much money I was leaving in that deal, the first option of the 6-bed all-en-suite was going to be about 13%, but the 5-bed with 2 bathrooms was giving me a return of 15%. So it was much better for me to go down that second option, because although it wasn't going to give me as much cash, my money was working harder. It was only costing me £18,000 to do the refurb instead of 60. So that left me with a pot of 42,000 that I could spend on another property. So any property that you're looking at buying, really make sure that you work out your figures to work out what is going to be the best way for you to make your money work hardest. And that was the first property that I started to use for social housing. And that was at about the same time as Section 24 came in. So Section 24 has hit me really, really hard, because I've bought all of my properties in my own name, and because I've bought them over such a long period of time. So now that I can't offset mortgage interest as a cost, I really had to find a way to make my properties work harder. So what I did was I looked at my 3-bedroom buy-to-lets, and I converted some of them into 4-bedroom HMOs that I've been able to lease for social housing. So the reason that I've done this is that I can, the first one obviously is that I need to get increased rent. And in Birmingham, that took the increase on my rent from £700 a month as a family home to £1,125 a month as a 4-bedroom HMO. And because it is leased to social housing, I don't pay any bills, I don't have any voids, and I've got a lease that is going to be in place for the next 4 years. So I know and I can plan exactly how much money that I'm going to have coming in. So for me, to get that extra £425 a month made it worthwhile to spend about £10,000 on making the houses HMO compliant and bringing them up to the standard that the social housing provider wants. So this is why for me, social housing just works really well. So all through coronavirus, I haven't had a single one of my social housing providers not pay their rent. I'm working with about 80 investors now that are following a very, very similar model to what I did with my own properties, because I tried it out with my own properties first, and we started this about 3.5, 4 years ago. And once I knew that it worked and that the rents were coming in and there weren't any issues, we then started talking to other investors to say this might be something that you want to think about, because it just gives you some really good options. Now, if you are somebody who invests in HMOs, and one of the reasons that you invest in HMOs is because you want to be able to put all of your pretty, beautiful pictures onto Facebook and everybody gives you a pat on the back and says, oh, isn't that beautiful? You won't want to do social housing, because the social housing houses that we hand over are clean, they're fresh, they have new furniture, they are homely, but they're all painted white and they've got grey carpets. There's no sort of like, you don't have to do feature walls, you don't have to dress the rooms. So if you want people to be giving you loads of praise and loads of congratulations because you've done this fantastic design, social housing won't interest you. But if you want to invest in property to get a really good return on your money, then social housing is definitely something that you should think about. And some of the things that I think about as to why in particular that I like it is I get guaranteed rent. I'm being able to maximise the return on my investment property because I'm getting a better rent for it. Yes, I've spent a little bit more on the refurb, but I'm also getting a better return. For me, it helps from a sort of like a moral standpoint, because I feel that I'm helping the local community and I'm helping people in need, because generally the people who are going to be living in the property are going to be homeless. So you are providing a property to a social housing provider who is going to be helping those homeless people put a roof over their heads. The majority of maintenance is undertaken by the social housing provider. You will still be responsible for the roof, the bricks and mortar, the actual structure of the property, and usually the central heating boiler. But if you get a leaking kitchen sink, if you get a blocked toilet, if you get one of their tenants has got an anger management issue and they put a fist through a wall, all of those things will be dealt with by the social housing provider. So they are taking on the majority of the maintenance as well. And all of the utility and council tax bills are paid for by the housing provider. They will put a cleaner into the property. They will look after the garden. So for me, it just gives me everything that I look for and makes it a whole lot simpler. And a lot of my friends have said to me, Sue, you're in a lettings agency. Why have you gone down this route? If you have an empty property, it's very easy for you to advertise it and to get another family to live in the property. But why wouldn't I want to go down and take this option where I get guaranteed rent? I'm earning £425 a month more than I would as the property being a family home. I don't have to do any maintenance. And it gives me that sort of like warm, fuzzy feeling, because as a landlord, I feel then that I'm helping other people that are in need. So those are the reasons why I particularly feel that social housing is a really good option, and why I think that it is something as landlords that we can all look into. Now, you do need to get specialist lending So you will need to find a broker that understands lending for social housing. You will make sure that you declare it to your insurance company, because again, it's not just a house that's being used as a family. You have a lease on the property, and you will have vulnerable tenants. So it does cost me a little bit more to insure my properties, but if you do it right from the outset, then everything is going to be okay. I think I've got a few minutes left, and I think there might have been some questions that have popped up. Jack or Jasim, could you just go back, and if there's any questions that I can answer them in my last few minutes?
Yeah, I'm just going through. Give me a minute.
So, Sue, I can ask you a couple of questions.
Okay.
So I know you shared that, you know, sometimes people want to build these high spec HMOs and they don't actually do enough due diligence when it comes to return on investment.
Yeah.
Let's go a step before that. How do people actually find out if the property is right for social housing or for a high spec HMO in the first place?
Okay, so what you,
what's the requirement there? Yeah.
Okay, so what you would need to do in the first instance, because this is it works across all areas of the UK, but in the first instance, you need to find the social housing provider that you want to work with. You need to find the provider that will work with individual landlords and lease properties from you. And then when you've got that information, you then know the specification that they are going to be looking to. And that's how you then make that decision in the first instance. So in Birmingham, it's very, very easy. It's very straightforward. And if anybody wants to invest in Birmingham or the Black Country, which is like Dudley, Sandwell, Walsall, please feel free to talk to me, because we've got contracts in those areas and we can shortcut stuff for you. If you want to invest in other areas, then you do need to go out and do that work. You need to make the phone calls, you need to do Google searches, you need to find the companies. And then when you found the company that will take a property from you, you then need to say to them, right, what is your specification? How much will you pay me? What are the terms of the lease? And then you can decide, is that the right option for that particular house?
Sounds good. Here's another question. Let's say if someone is looking in Birmingham or the Black Country, they can come to you. But if they, let's say they're outside of these zones, how can they find social housing providers?
How? Google.
How? Google. Okay.
Yeah.
Sounds good.
Google. And then, yeah. So you'll
what
Google.
Do they write?
Yeah. So you'll Google like housing association or social housing provider or supported living company, and then literally ring up, make phone calls. It's not easy. It's not going to happen overnight. One of the guys who's a member of Partners in Property, he came to a seminar that I did on social housing in October. And when I spoke to him in May, he'd made between 400 to 500 phone calls to different providers. And then he'd been able to find 4 or 5 providers that he can now work with. So don't expect to make 2 phone calls and you'll find a company to work with. I spoke to somebody last week and they said, oh, I'm finding this really difficult. I went, okay, how many phone calls have you made? They went, about 5. I went, okay, there's your answer. You haven't put in the work.
Well, I think we all know, those who are experienced, we know that it doesn't take 100 calls. It takes about 100,000 calls to really make your business a sustainable business. We know that. But no, thank you for sharing that. If anyone has any questions for Sue, please,
There are a few questions which are posted while Sue was talking, so I'm just going to read them out so she can answer them.
Thank you.
There's a question by Rai. He says, I went to University of Birmingham. What are your views on Harborne and Selly Oak areas?
Right, Harborne is brilliant. It's where I live. It doesn't work for social housing because it's far too expensive. And Selly Oak is the student area and it is absolutely overrun with student accommodation.
Okay. Next question from Lucy. She thinks, Sue, privileged to meet you. Love what you do. Question, how do you source your social housing properties? Are there any specific differences to go for?
I think that I just covered that.
Yeah.
Which was literally that you just get on the phone and you talk to the companies.
Okay. Next, there's a question from Paul Holder. He says, is there any compliance for social housing?
Yeah, absolutely. If it's going to be a property that's going to be used as an HMO, then it has to meet all of the HMO requirements and standards. So it needs to meet all the requirements on sort of like minimum room sizes, it needs to have all the fire doors, the interlinked smoke detectors, emergency lighting, window restrictors, all of the stuff that you would have in any HMO.
Noted. There's a comment from Bola saying, Sue, please, I would like to know more on the social housing. I think if you're okay, Sue, I think she can get in touch with you and
yeah, absolutely. Jack, can I share my telephone number? So if anybody wants to get in touch,
of course.
Yes,
That was my next question. Where can people find you? Those who don't know you, where can people get in touch with you? Please do leave your number in the chat box so they can get in touch with you directly.
Happy to do that. I'm maxed out in terms of my Facebook friends. So it's very difficult if you want to make friends with me on Facebook, but you could, I've got a Facebook group, which is the Sue Sims Property Community. So just ask to join that Facebook group. I'll put my telephone number into the messages, and the best way to get hold of me then is by WhatsApp or by Facebook Messenger. And I'll try to answer whatever questions anybody's got and help anybody that I can do.
Fantastic. I remember I came down to your office. I think your company is called Property Genie, correct me if I'm wrong?
That's my old company. My new company that we set up about, it's not so new, we set it up about 3 years ago, is Genie Homes.
Oh, it's Genie Homes now. I remember I walked into your office and yeah, it looked pretty interesting. But yeah, no.
Thank you.
If you are, those who are watching this, and if you want to learn more about social housing, or if you want to invest in Birmingham or Black Country and want to increase your return on investment, or want to understand social housing as a general, so how Sue can help you in the process, please do get in touch with her. She's absolutely amazing. I've known her for quite some time. I've been observing her journey. In fact, I actually even called her for one of my properties in Warsaw. But she's an amazing, amazing person, and she's very open to helping everyone. So please do get in touch with her if that is your zone to invest in. So thank you once again, Sue, for being on the show with us here. Yeah, go ahead.
I'll just leave you just with one thought, and I think that this is really, really important for everybody, and it's the mantra that I live my life by, which is create a life you love. So every single day, I absolutely love what I do with property, because I get to talk to people all day, every day, about something that I'm really, really passionate about. So I never get a Monday morning when I get up and I think I don't want to go to work. I never have that Sunday evening feeling of, oh, it's Sunday, I've got to go back to work tomorrow. So if you can find something that you are really passionate about and you can make that into your job and you can make money from it, you'll never work another day in your life.
I agree.
So just remember that, because I think it's really important.
I agree. Again, thank you for sharing
My
that.
pleasure.
Absolute pleasure to have you on the show. So yeah, thank you once again.
Good to see you all. Bye.
Thank you, Sue. Bye-bye.
Let me add a bit more to what just Sue shared with you guys and girls, that look, when you run a business is all about people. It's a people's business, right? Business is all about human beings interacting with humans, right? And if you can learn or improve your personal skills to a point where you're very comfortable, where you're very confident speaking with people, and you enjoy that, because remember, the more you do it, the more you tend to enjoy. We're social beings at the core. You're going to find that whatever kind of business you go into, you're going to enjoy it. So if you improve your personal skills, personal development and personal skills or communication skills to a point where you're very, very comfortable speaking with people, you're going to find that you're going to enjoy most of any business that you might start. And we're talking about property business here, but you're going to really, really enjoy that. And I've kind of, I've become that person where I love working with people. I enjoy talking, sharing my experiences, and obviously learning from other people as well. And I get exactly the same feeling as Sue said that, I don't feel like I'm working. I wake up and I feel like I really actually want to do what I do, which is what I'm passionate about, which is all about people. So yeah, that was just my little experience there. Now, our next speaker is a very, very seasoned investor. He has been investing in property for many, many years. Now, at the moment, they're very, very focused on buy-to-lets. So please help me welcome Paul Mahoney. Paul,
Hello,
can you hear me?
I can hear you. Yeah, can you hear me?
I can hear you, definitely. It's a pleasure to have you on the show. So tell us a bit more about yourself.
Yeah, thanks for having me. Pleasure to be here. Myself, I founded Nova Financial Group 6 years ago in the UK. We advise on pretty well all aspects of property investment. We have our own approach. You know, the thing I love about property and the great thing about listening to Sue is that her approach is very, very different to ours.
Yes.
And there's so many different ways to go about property.
Right.
And I'm a big believer that, you know, you just need to find the way that works for you and your situation and your goals and the time you have available and all those, your criteria, if you like. As I say, that's what I love about property. And I think that's what's great about today is you've just heard one way of going about it. And now you're going to hear a very different way of going about it. And those two different ways will suit different people. Me personally, my background, I previously ran a large financial services company in Australia. Obviously, I'm Australian. I'm sure you can tell by the accent. We provided full service financial advice, financial planning, and property formed part of that. We publicly listed that company in 2014. I left, came to the UK and started Nova. The reason for our business, and I suppose part of the reason we've done quite well, is we spotted a big gap between estate agents that sell properties, which is fine. You know, there's nothing wrong with that. But it's hard to rely upon an estate agent's advice because they're quite often selling a book of, you know, let's say 20 properties in their local area, which may or may not be suitable for you out of the thousands that are available in the UK. And then on the other end of the scale, you've got financial advisors who, in the right circumstances, are quite good at advising their clients toward their goals, but they specialize in equities, shares, pensions, and not property. So there's a big gap of people in the middle who struggle to get independent, reliable advice. And that's essentially the gap that we aimed to fill. I think we've done a pretty good job of it so far. In those 6 years, I'm pretty confident in saying that we have established ourselves as the industry leaders in what we do so far as giving financial advice that specializes in property investment as the vehicle. More personally, I've pretty much invested in everything there is to invest in. I've got various businesses across, you know, I think I've got about 7 or 8 different property businesses now. I've got e-commerce sites. I've got health and fitness stores. So I've got businesses across various industries, and I've got a reasonable property portfolio that I've built over the years. I've done some property development. We're kind of scaling up the property development side of things now. So have experience, you know, pretty substantial experience across financial services and property. I've also, across those sort of, I think 12 odd years now doing what I do, have been involved in thousands, if not tens of thousands of property transactions with the clients that have worked with our businesses. So in a nutshell, that's me. I've also written a best-selling book on the topic, which is the Property Pension Plan, and I'll provide everybody with a link at the end to get a free copy of that. So that's a bestseller on Amazon in the UK and Australia, and effectively talks all about our approach to property and why it's a very good way, even just for the average person, to build an alternative to or addition to a traditional pension. Because, you know, I think one of the ways I've seen people kind of thinking about property in a bit of an odd way is being quite emotional about it. You know, only investing in what they like, only investing in what they know that's close to home and all those sorts of things. Our approach is very unemotional and commercially minded. It's all about making money from property. You know, for example, again, contrasting to Sue, we're not trying to provide social benefit. I'm a huge believer in giving back. In fact, the final chapter in my book is all about giving back. but I'm also a big believer in making money first. So that's how we look at property, as a vehicle or a tool for improving our financial position. And then once we have a decent financial position, then we can try to give back to the community. It's kind of our view on things. So that's me in a nutshell. Jack, you kindly asked me to come on today and give one of the presentations that we've been doing lately. Much more accustomed to doing these face-to-face across the kind of UK property scene and elsewhere. But since lockdown, we've been doing a couple of webinars a week, which have been quite popular, which is good. And the one that I was going to present today is learn the best buy-to-let strategies for 2020 and beyond. So effectively talking through some of the key fundamentals of how to invest well and safely, regardless of the economic or political climate. And we get asked the question a lot at the moment as to whether our strategy has changed at all, given COVID-19 and the impending recession, etc. And I like being asked this question because the answer is no. And, you know, I'm not saying that we're geniuses in any way. What I'm saying is we're aware that recessions have happened before and they're going to happen again. And therefore, we're big believers that you should be looking at property as a 7 to 10 year plus investment. And I think in that way, some people struggle to see beyond their nose a little bit, you know, because 6 months ago, people were worried about Brexit. And 6 months before that, people were worried about Section 24. Now people are worried about COVID-19. Next, they'll be worried about the recession. And then it will be Christmas and everyone will be worried about Christmas. You know, there's always a reason to think, oh, should I wait? Should I sit on the sidelines? And a quote that I'm sure I stole off someone at some point, but have, you know, very much claimed it as my own, is that property investment is not about timing the market. It's about time in the market. So I'm a big believer that if you have spare resources, there are always going to be good opportunities. And therefore, we should best utilize those resources when they are available at that point in time. And it doesn't matter if there's a crash tomorrow, because if you're investing for the mid to long term and you've invested in properties that are going to be tenanted, which is the main thing, and believe it or not, people still need a roof over their head, even in a recession, it doesn't really matter. So in a nutshell, that's kind of our approach and some of the things that I'll be covering in the slides today. Jack, would you like me to share my screen to get the slides up?
Yes, you can share your screen.
Okay, great. I'll do that now.
I like it. I like what you just said, that it's not about going in the property. It's more like being in the property. I don't know. I didn't get your exact words, but I know exactly what you mean. It's all about being in the property world and investing consistently for a long period of time. I believe it's, forget about short term. If you're in it short term, you shouldn't be in it in the first place. Yeah. But I believe if you're medium term, even then it's a bit of an iffy situation. I believe property is a very, very long term investment. And if you are in it for a long time, you're going to make loads and loads of money out of it.
Put it this way, coming from a financial advice and financial planning background,
yeah,
I've dealt with a very broad range of people. And it's quite saddening to see people that are late in life, have earned a really good income their whole life, but have always had a reason to sit on the sidelines. And there's a very good book on this topic called Ready, Fire, Aim.
I've done that, yeah.
Yeah, property investment is a business, remember, and you know some of the concepts you guys were just talking about are very, very true. But another really good concept is it's never going to be perfect. Yeah. The market, your product, your approach, there is no such thing as perfection. Yeah. And it's the people that take action and make positive change that are successful. And even if you fail every now and again, at least you're trying and you're learning and you're progressing.
True.
So I think that's the key thing. And, you know, for example, at the moment, a lot of people are saying, oh, should we wait? We'll wait until the end of the recession and then we'll buy right at the bottom of the market because, you know, my name's Nostradamus.
Yes.
That's not usually how it works out.
No, it doesn't.
And we may not, well, it looks like we probably are going to have a recession or we might even be in one. but that may not affect the property market in a very negatively way. We don't know. So that's why I'm a big believer of taking action based upon the right fundamentals at the right point in time. So I'll share my screen with you now. Right. So can you see those slides?
Yes.
Okay, excellent. Good. All right. So just a little bit of housekeeping to start off with. We're a regulated company, so it's important for me to say that anything that I cover in the talk today is general in nature. So it's not specific to your situation. You shouldn't necessarily act upon it. You should seek financial advice before doing that, before making changes to your finances and investments. And that just so happens to be something that we can help you with on a one-to-one basis. So I'll provide my contact details at the end, and anybody who's interested will be able to have a free one-to-one consultation with one of our senior client advisors to see how you might be able to improve your situation. That leads into my next point quite well. If there is any terminology that I use that isn't familiar or that doesn't make sense and you'd like clarification, I'm sure we'll have time for some Q&A at the end. But then again, of course, as I say, you'll be able to have a one-to-one chat about it as well. And I'll also take you through a bit of a promotional offer that we've put together specifically for this webinar to waive some fees if we were able to provide some assistance. So, bit of an agenda. I'll start off by just introducing our business so that you understand the direction from which we're approaching this. I think that's important, so that hopefully you understand why it kind of makes sense to maybe listen to what we've got to say. The importance of strategy. So, completely separate to property is, I suppose, understanding what you're actually trying to achieve. So I'll talk about the importance of that. Why leveraged property, the key word there being leverage, the ability for debt or mortgages, which in my opinion, when comparing property with other investment options, that is the differentiating factor. That's what makes property so attractive. Risk versus reward and how we can skew that in our favor. Some of the key fundamentals that we want to tick, the boxes we want to tick to give ourselves the most confidence in sustainable demand, mitigating risk, and actually achieving the outcomes that we're working toward, current market trends, and then some 5-year predictions. So first off, our business. So Nova Financial Group is the overarching brand under which a number of different businesses sit. And it's very much an end-to-end service that we provide for helping our clients go from where they are now to where they want to be. So first off, we do a full review of their current situation. Now, I found that most people have an understanding of how many properties they've got, about how much debt they've got, but they've never really worked out what their net investable asset base currently is, or more importantly, what it needs to be for them to achieve their goals. So for most people, the end goal is a certain amount of passive income per annum to live comfortably. You might look at that on a monthly basis, you might look at it on a yearly basis. It doesn't really matter. But most people haven't really worked out what's the actual pot of money I need to give me that on a sustainable basis. So that's one of the first things we do, help people better understand that. And I think that's very useful. Then we need to put in place a strategy for helping them achieve it, implement that strategy through sourcing the most suitable properties in the most suitable locations. So the actual sourcing and the research and due diligence that goes into that. Again, keeping in mind that we couldn't really care less where the client is based. We have clients in Australia, the Middle East, all around the world. And what I quite often say about that is, my clients in Australia that have bought properties in Manchester, their properties perform just as well as the clients that live in Manchester, because we're able to provide a fully managed service. Next point, we have an in-house mortgage brokerage. So we advise on and arrange the finance. We provide property management services UK-wide. So we manage the properties, and then we work with our clients on an ongoing basis to help them review and reinvest when it makes sense to do so. So in a nutshell, that's what we do. Very much end-to-end. We can make the process very easy. Some of our clients utilize all of our services, others utilize some of them. And the point here is, as individuals, we are all limited by our resources, myself included. I only have so much time, knowledge, experience as one person. As a business, we have those things in abundance. So we can help plug the gaps and give more confidence and clarity in what is quite a big decision, being, investing in property. It's usually one of the biggest purchases you'll ever make, and therefore you want to do it with as much confidence as you can. The biggest point of difference is that we're independent. We don't have anything to sell. We don't have a book or a list of properties. It's all bespoke to the individual. It's end to end. Qualifications, well, I'm a qualified financial advisor and mortgage advisor. I'm supported by a team with over 100 years of experience across financial services and property. And we've got very strong relationships across the UK property market. Our clients invest in about 30 properties a month on average through us. So that gives us buying power that we can leverage to position our clients in the best possible way. So in a nutshell, that's what we do. Strategy. So as I say, strategy is important. And it's very, very important to understand where you are now, being point A, where you want to be, being point B, and where you want to end up, and what the time frame for doing that is. And I found that most people haven't done this. And an analogy I sometimes use for this is it's like jumping in your car and driving aimlessly. You're probably pretty unlikely to end up somewhere desirable. And even if you knew what the desirable location was that you wanted to get to, if you don't know how to get there or you don't have a roadmap for getting there, you're probably fairly unlikely to get there. So I think it's quite similar with investing, and I've found it's even more so the case with property, because quite often when people invest large sums of money in the share market, for example, they'll get advice because they realize they're not experts on the companies they're investing in. But quite often, property ends up being a DIY activity, which I don't think is very sensible in the current market, especially when you consider things like all the changes lately, Section 24, the stamp duty premiums, mortgage serviceability changes. There's been lots that's changed. And therefore, a strategy that worked 5 years ago may not work now. And a strategy that didn't work as well 5 years ago may work a lot better now. There's also been quite a big shift in locations, London and the Southeast, that historically have performed really well from a growth perspective, have plateaued for the past few years. And places like the Midlands and the Northwest have started to perform really well from a growth perspective. So all of these things need to be taken into consideration, and it's quite difficult to do that on your own. All this helps you remove guesswork, gives you more peace of mind, helps you account for contingencies. By getting advice, you're not reinventing the wheel. You can benefit from other people's mistakes rather than having to make them yourself. And it allows you to take a business approach. Now, I'd say that most people in the property industry that know what they're talking about would agree with me that property is no longer a hobby. You can't just buy the property at the end of your street and expect to make a fortune anymore. There's more to it than that. And there's a bigger gap between what works and what doesn't. A good example or a good little story of why strategy is important is there was a study done of the 1985 Harvard MBA class. They asked them, do you have clearly defined goals and are they written down? Now, 3% did. 27% had goals, but they were not written down. And the others didn't have any specific goals and they were not written down. They surveyed the same group 10 years later, and the 3% were earning 10 times as much as the 97% combined. Now, the moral to that story is that the simple act of sitting down and writing out your goals with a bit of an idea of how you're going to go about achieving them gives you a far greater chance of achieving them. As I say, this is something that we can help with, but if there's one thing you take from my talk today is maybe spend 5 minutes or half an hour or an hour this afternoon, probably with your partner, sit down and write things out. It's a scientific fact that simply committing pen to paper for something gives you a far better chance of going about achieving it. And I think that's really, really important. And a lot of people overlook that. A question I usually ask in my webinars is how many people sat down at the start of this year and wrote out their goals for the year? And most people say they didn't. The most common answer is that they were too busy to do it, which when you think about it, that's a little bit silly. lots of us spend 40 hours plus a week working really hard to make money, but spend very little time working out how best to utilize that money. And that's a really, really important point that's going to contribute toward your financial position. So onto property. Why leveraged property? Keyword there being leveraged, the ability for debt or mortgages. Now, there is no other investment option to my knowledge that you can take high levels of debt. So for example, 75% loan to values are the sort of standard practice for the industry at low interest rates. So currently 2 or 3% interest rates over the long term. So 10, 20 year plus timeframes. And the key point being, even if the value of your property falls substantially, there is nothing the lender can do about it. So I found that lots of people don't know about this, but with most buy-to-let mortgages, even if the value of your property halves, there's nothing the lender can do. And therefore you can see out the recovery period. You can't do that with other investments. If you invest in shares with a margin loan and the value falls, you have to put in more cash and they reassess the value. They don't do that with buy-to-let over the whole mortgage term. So it's very, very low risk because it means even if the value falls, so long as you're still servicing your mortgage, you're safe. Now let's use an example. So I can take 50 grand and I can invest into a £200,000 property using a 75% mortgage. So effectively, I've quadrupled my buying power. In the current market, what we're achieving is yields of somewhere between 5 to 10% net yields on the funds applied. Now, I encourage you to look at your returns always on a funds applied basis or an ROI basis, because with that 50 grand, you could put that under your bed, you could invest it in shares. It just so happens we've decided to invest it in this property with debt. The returns on the property are almost irrelevant. It's all about the returns on the cash that you've put in. So 5 to 10% net, using that example, that's £2,500 to £5,000 of net cash flow post all expenses. So after paying for your mortgage, your management, all of the costs that go into the property, 5 to 10%. We very rarely look at something that's less than 5. And sometimes, usually we're somewhere in the middle, sometimes slightly higher than 10. But income, especially initially, is nice and it creates a safety buffer, but it's not really the reason for the investment. Where you really make money from buy-to-let property investment is from the growth side of the equation. Now, the UK average for capital growth over the past 20 years is 5.5% per annum, is the average per year. Some years it might have been -2%. The next year it's 8%. The average is 5.5. That includes 2 recessions. So we had one in 99-2000 being the dot-com bubble. We had another one in 2008-2009 being the credit crunch. The market dipped a little bit there, not hugely for property, but still dipped a little bit, and it's still 5.5% positive. So if we scale that back slightly to 5%, to be a little bit more conservative, 5% on the asset value gives me 20% on my cash. Put that another way, a 200 grand property that increases in value to 210,000, therefore 10 grand equity created, gives me a 20% return on my 50 grand invested. And the way that we access that is by remortgaging the property to release that equity and buy more properties. Now, quite often lately, I've been asked the question, are we really going to get 5% growth at the moment? And the answer is, it doesn't matter, because we're not investing for the next 12 months or the next 18 months. We're investing for the next 10 years. And if you invested in good properties in good areas, then yes, you can be very confident in getting more than 5% growth per annum as an average over that time frame. So if we look at those two figures of returns, 5 to 10% yield, 20% growth, we put them together and we're at 25 to 30% returns per annum on the cash we've invested. Now, I'm yet to hear a logical argument that tells me that's a bad return. It's not. It's a fantastic return. But what's really interesting about that is we're achieving that return on our cash by simply matching the average on the property returns. So, you know, people talk about renovation projects and development projects and all that sort of thing and achieving strong double-digit returns from that. You don't have to do that to get strong double-digit returns. Simply by investing in buy-to-let with leverage, you can get these strong double-digit returns with a strong level of confidence and with very little time and risk from your end. So I think that's very interesting. And what it says to me is that buy-to-let property investment isn't necessarily about trying to maximize returns. Because, for example, we could go out and we could invest in, you know, really high, low value, high yield areas to try to maximize the yields. But usually what you'll find, and for example, the northwest of England, you can get properties up there which will give you an on-paper yield of 15%. But I say on paper because that's what it is. You're unlikely to actually get that because the vacancy rates are higher, the quality of tenant is lower, the ability for mortgages is much lower as well, and whether your property is going to be looked after or whether it's going to cause you lots of headaches is a big question mark too. We prefer to invest in desirable properties in central or surrounding central locations in major cities, targeting young professionals who are willing and able to maintain the property and pay the rent, really regardless of the situation. And again, I heard Sue say something about she's been able to maintain her rents throughout the whole COVID period. And that's very interesting because so have I. At the opposite end of the market, given that all of my tenants are young professionals and are still employed, I haven't had any issues collecting rent, even though I know some landlords have. And I think the most of the landlords that have are probably the ones that are invested at the lower end of the market, but not being paid by social housing providers, if that makes sense. People that have struggled, and that's fair enough. Some people are struggling at the moment, and that's why the government's brought in this scheme of no evictions. But me and my clients with this approach haven't, because, you know, most of our tenants are on above average wages and they're able to afford the rent. So I think this is very interesting. Now, what's more interesting though is if we extrapolate that over a 10-year period, we're tripling our money over 10 years. So 250 to 300% over 10 years. We scale that back slightly. It means we're doubling our money every 3 to 4 years. So we're getting 25 to 30% per annum on the cash we've invested, 100% over 3 to 4 years. And that means we can remortgage our initial cash out and invest again every 3 to 4 years. And that's what we refer to as the snowball effect. So we start with one property. In 3 to 4 years, that initial investment turns into 2 properties. In another 3 to 4 years, it turns into 4. And in another 3 to 4 years, it turns into 8. So that means that over a 10 to 15 year period, you can turn 50 grand into 400 grand and 1 property into 8 properties without doing very much from your perspective of a passive investment and no further inward investment. Of course, if you're investing in 50 grand a year or 50 grand every few years, then you create multiple trees of that. And I'm sure you can see how that can have a huge impact on your financial position. If you do that twice, for example, it's very achievable over a 10 to 15 year period to turn 100 grand into nearly $1 million. So, you know, that for that, I suppose, it depends what we talk about being the average person, but what I often refer to as mum and dad investors that have some spare resources, whether that be cash in their own account, cash in their business, some equity in their home, that they can start to work toward a 10 to 15 year strategy of actually building a fairly substantial investable asset base. So how do we give ourselves confidence in at the very least, matching the average returns across the market? Some of the key boxes we want to be ticking is investing in locations with large tenant pools and strong tenant demand. That's key, because the main risk of leveraged property is having a tenant. If you have a tenant, you can service your mortgage and therefore there's very little risk. So you want very, very tenantable properties, areas with low vacancy rates, where there is a strong skew in demand toward your type of property. A broad range of industries that provide a lot of employment, remembering that most of us live where we live because it's relatively close to work. And therefore having an abundance of employment provided by a range of industries is very important. Relating that back to the current scenario and any concerns about property due to COVID-19, areas that I would be concerned about over the next 6 to 18 months are locations with very thin job markets, especially that are strongly related to industries that are struggling. So, you know, airline and entertainment are the two probably main industries that are struggling at the moment. A lot of smaller cities and towns across the UK are driven by one industry, or even in some cases one company. If those jobs dry up, then that area is going to struggle because those people have to leave and go elsewhere. I was telling this sort of logic to a client the other day, and because he asked me the question of, well, now more people are working from home, isn't that going to change all of that? And the answer is not everybody's working from home. But if we think about the last recession, that what I just explained there happened. And actually he said, oh yeah, that's right. In 2008, I was living in Essex. I lost my job and I had to go to London to get a job. So literally he was the case in point of the logic I've just given you. So that's generally what happens is the jobs dry up in the smaller areas. People have to go to the major cities to get a job, and actually rental demand quite often will rise in those major city areas during a recession because there's less people buying and there's more rental pressure. So that gives you even more confidence that even in bad times, if you own good properties in central major city locations, that they're still definitely going to be rented regardless of where we are in the economic cycle. Infrastructure, so both large and small, large being roads and rails, small being shops, restaurants, bars, cafes. Effectively what we're looking to do here is tick as many of the boxes as we can so far as what makes people want and need to live in your property in your location. If we have an abundance of those driving factors, that gives us more confidence in the sustainability of demand. Again, this all very much relates to any concerns around the economy, because if you have these things in abundance, the economy is almost irrelevant because they are sustainable. Socioeconomic levels being the demographics of your target market. So things like average wages, unemployment rates, vacancy rates, all of the statistics are important to understand. The Office of National Statistics is a good source for these things. And there's a range of research houses that provide reports on these things as well. Or, you know, we help clients with this sort of thing. Understanding what your target market wants is probably more important though. Where some people can go wrong is finding a good area, but investing in the wrong property in that area. For example, a good family-oriented area doesn't make much sense to buy a one-bedroom flat there. Because if your average household makeup is 3 or 4 people and no one lives in one-bedroom flats, that can be a very bad investment in a good area. And vice versa, you know, if you're investing in a city centre location, average household makeup in most city centres in the UK is 1.8 people, and therefore 1-bed or 2-bed flats makes the most sense in those locations. A good balance between yield and growth prospects is more and more important in the current market, especially since things like Section 24 and the mortgage serviceability changes, having to meet a benchmark rate to get maximum borrowings. Yield has become more important. And, you know, the sort of older strategy of, for example, buying in London just for growth and just breaking even on yield doesn't really work as well anymore because you need more of a buffer. And effectively what we're looking for is positive growth and change. Positive driving catalysts that are going to change things. Now, I think one thing that I quite often talk about is when it comes to property investment, you should ignore the media. The media often has its own sort of bias toward things because they want to sell papers and sell clicks. And, you know, I get calls by journalists all the time wanting me to say certain things. You know, they're fishing for me to say certain things to them so they can write their article around a quote. And if I don't say what they want to say, they don't publish it. So things like, you know, everybody leaving city centres to move out to the country, that they've been writing a lot about that lately, but that's not necessarily happening. Same goes with the eviction ban being a terrible thing and all that sort of thing. They write what they want to write. So quite often you'll read in the media that the UK property market is going to grow by X% this month or decline by X% this year. But the UK property market as a whole is almost irrelevant to us as individual landlords, because we don't invest in the UK property market. We invest in individual properties, even if we're buying blocks of properties, we're still investing in individual blocks in a single location. And they might be across various different locations, but they are going to be driven by individual driving factors. So the UK property market is made up by various microclimates. I'll give you a good example. I've just bought 2 properties in a place called Digbeth in Birmingham. For those who aren't familiar with Birmingham, it's southeast central Birmingham. It's a 5-minute walk to the centre of the city. But it's kind of been the underloved area of central Birmingham. It's somewhat comparable to Shoreditch 10 or 15 years ago in London. A bit of a grungy area, but it's 20% cheaper. And now there is literally billions of pounds being spent there. And I'm very confident in saying that even if the UK property market goes backwards by 5 or 10% over the next 12 months and then recovers, Digbeth is probably quite likely to do the opposite over that same time frame. So my point to the example is, forget about the UK property market. Focus on locations with the strongest driving factors that tick as many of these boxes I've just been through as possible. And that will give you confidence in performance, not just in the mid to long term, but also in the short term. Hopefully that's useful. And Digbeth isn't the only one. There's loads of others. There's Salford in Manchester is another good one. An area that kind of been a little bit underloved, but is being squeezed by the city centre in Manchester and Salford Quays, pretty much looking to become one over the next decade. Risk versus reward. So obviously we want this to be in balance in our favour. One way of doing that is investing in locations with very low vacancy rates. Vacancy rates in a location, obviously referring to how many properties are empty, is a good indication of supply versus demand. When you look at supply versus demand, where a lot of people go wrong is they only look at supply. They don't look at the opposite side of the equation. For example, the Financial Times published an article about 6 months ago about Manchester city centre, and there being about 14,000 units planned to come to market over the next few years. And that's true. However, the Manchester City Council announced at a similar time that there was a requirement for 5,000 a year, which added up to 25,000 over the next 5 years. So the demand was outweighing the supply. So you need to make sure you're assessing both sides of that equation. Fair value. So my point here, and the reason for this terminology, rather than buy as cheap as possible or get the biggest discount as possible, which you quite often hear people say, is sometimes properties are fairly priced. And sometimes you don't need X amount of discount to make it a good deal. And I think this is one way that a lot of people miss out on some good deals, is they're very headstrong about getting X amount of discount. And you don't necessarily always need that to make it a good investment. And further to that, in my personal experience and with clients I've dealt with, the property where you think you got a really good deal because nobody wanted it, there was a lack of demand for that property, so you got a massive discount, versus the property where you begrudgingly pay fair value because there was lots of demand for it and lots of people wanted it, the latter will usually perform better over the mid to long term, especially if you're a passive investor. If you're a property developer or you're much more hands-on and you're going to substantially change that asset, that's different. But that's not everyone.
Interrupt. We have 5 more minutes.
Okay, no worries. That's not for everyone. You need to consider the time and the knowledge that you have available to you as an individual. So some of the current trends in the market, a substitution of space for place. So this is a generational trend. If we look at the baby boomers, they got married earlier, they had children earlier, they had a preference more toward having the bigger family home further away from town. Young professionals don't have those preferences anymore. They're getting married later, they're having children later, they're much more work focused, working longer hours, and having things like employment, bars, restaurants, cafes, gyms on their doorstep is much more of a long-lasting preference. So you need to account for those things. That's resulting in more city centre living. Again, the Manchester city centre is a perfect example of that. 20 years ago, there was only 1,000 people living in the Manchester city centre. Now there's 30,000. Because before everybody lived out in the towns, they travelled in. Now everybody wants to live in the middle. Younger generations moving or staying north. This probably isn't much of a surprise. There's been lots of media around this, but the livability and the cost of living being much, much lower in the north of England, especially places like Birmingham and Manchester, which are major cities in their own right now, providing very similar wages to London, but with a fraction of the cost of living. More of a focus on yield. Higher value properties are struggling, where they provide lower yields, whereas lower value, high yielding properties are doing much better than they have in the past. And there is safety in desirable centrally located properties. Very nearly done. So far as predictions, we can almost forget about this year. I don't think anyone knows what's going to happen this year, but something that's very interesting is that the property market currently is very, very strong. It's bounced back extremely well from lockdown. We had nearly our busiest month ever, but definitely our busiest month of the year in July for property transactions. And anybody who I know that's in property is experiencing something similar. Whether that sustains or not is questionable. But what is very interesting, I think, is that most research houses agree on the fact that regardless of what happens over the next 12 to 18 months, it will have very little impact on what happens over the next 5 years. So most people agree that even if the market dips a little bit, there'll be a V-shaped recovery, and the next 5 years will almost be as if COVID-19 never happened, so far as property price growth. That's again questionable, but who knows? Right, so that's my talk, guys. Just a couple of things I wanted to share is this is our website. It's nova.financial. Can I share this in the chat section, Jack?
Of course you can.
Okay, cool. I'll just share some links with you. I said about my book as well, so I'll just share some links with you all. So this is the website. Ooh. That's our website.
Thank you.
So you can find out a lot more about us there. There's lots of educational resources on there. I host a TV show on Sky called Proper Wealth. That's all on there. I think we've got 100 hours of educational video now through all the TV stuff that I've done. We've got lots of awards. The book I mentioned. So the book is usually £15 plus postage on Amazon. And at this link, you can get it simply paying for postage. So that's the link there for the book. And then lastly, if you prefer listening to books rather than getting the hard copy, this is the Audible link. So that's the Amazon audiobook platform. So there's 3 links for you, being our website, the link for the hard copy of the book, which is this one here. We handle all the postage for that. So if you order it now, you'll get it next week. And also the audiobook version. Very, just to finish up, I mentioned about the free consultation. So if anybody would like to have a conversation with one of our senior client advisors with regards to how we might be able to assist you improving your strategy so far as your next investments, helping you build, so on and so forth, there's no harm in having a conversation. And what I'd like to offer is that, it's first off a 5 to 10 minute conversation. Then we do a 60 to 90 minute full review of your current situation and an understanding of what we do to see if there's a fit there. We usually do that in person in our office in the city. Given the current situation, we do it all via video conference. So yeah, you can do it from the comfort of your own home. At that point, if there's a fit, we usually charge a fee of £500 to £2,500, depending on the complexity of your situation. That is on average 10 hours work specific to you, and we generate advice on how you can improve. What I'm offering is to waive that fee altogether. So we won't engage with everyone. There's no point wasting anyone's time. But if there is a fit there, if there is potential value that we can add, we will generate that advice for free. So potentially a lot to gain and very little to lose. And if you'd like to take advantage of that, those are my contact details. If you just send me a WhatsApp with your name and email, or email that email address with your name and phone number, then I'll put you in touch with one of our senior client advisors, and they'll probably be in touch on Monday or Tuesday. So yeah, feel free to do that, and I hope that we can be of some benefit to as many of you as possible. That's it, guys.
Thank you, Paul, for being with us here and presenting. That was amazing. And the reason I say that it was amazing is because all you did was you actually broke down everything about BTLs. That's all you did. It was actually simple. So let's put it this way. It's actually not simple. You just made it look simple.
That's what we tried to do.
Thank you for sharing that. Like I said, I think most people don't actually do all of this. I remember when I was buying my first BTL back in 2003, I actually did this when I was sitting around and I was looking at all the stats for the past 100 years online. I actually did this practice and it actually was very, very useful. But yeah, guys, if you want to work with Paul, and I definitely recommend, he's a very, very seasoned investor. I know some of the seasoned investors that he works with as well. They're also on Sky TV. So do connect with him. And then, like he said, there is absolutely nothing for you to lose to take on a session with them and everything to gain. So yeah, thank you once again, Paul, for being with us. Thank you.
No worries. Thanks for having me.
Thank you. All right, guys. I think this is very interesting. We actually just saw two very different perspectives on property investment. And they both work. They both work in their own respective ways. And it also depends on the kind of people you might be dealing with, or we are dealing with sometimes. It all depends on personalities that we come across. So yeah, they both kind of work in their own very, very respective ways. Our next speaker, when we invited him at one of our events previously, I had so many messages to help me connect with this speaker that we're going to have next. It was amazing. I wasn't expecting that sort of traction. I wasn't expecting that sort of response from our audience, but we had loads and loads of it. And I think the reason for that is because I think we are in this technology world now where most people want to automate. And this is something that I personally recommend people that, look, if you ever want to scale your business, it's all about automation. It's all about using systems, having systems and using systems in place. Otherwise, really scaling a business becomes very, very difficult. So our next speaker is a kind of a systems geek, and he's going to share with us all about property CRM. So please help me welcome Stephen Lai.
First of all, thank you very much, Jack. Thank you very much for the warm welcome. I mean, with a build up like that, I am going to do my very best. Number one, to make systems sound sexy, more importantly, more simple. But also, I'd just like to just to take a few moments just to thank both Sue and Paul for their great content as well. As a speaker in my specialist area, I think riffing off of some of the things that Jack mentioned there, do you know what? It makes it simple when you know how to do it. Yes. And often it's difficult when you're trying to fumble around how to figure it all out. So again, just a big thank you to both Sue and Sue and Paul. I got a lot out of that, and looking for the other speakers as well. So with that in mind, I'm just going to share my screen with you and just make sure that you can see everything here. Just bear with me. I'm just going to pop that up there, and that should make it disappear. And then I'll go into full screen share now. Okay, Jack, can you just give me a thumbs up if you can see my screen? Wonderful, thank you very much. So, first of all, thank you very much for the warm welcome. I would like everybody today to, big thank you for Jack, big thank you for the speakers, 20 to 30 minutes, pure content. Whether you're new to CRMs and wondering what the heck is a CRM, or you're a systems pro, because I know there are some systems people in the group today, I want to make sure that there's something sprinkled in this presentation for you. So whether this is your first time hearing me speak or you've seen me before, I've put some golden nuggets throughout the presentation. Now, our goal for you today is to leave you with some actionable takeaways. And I'd like you to hopefully be able to apply that back into your business straight away. Now, this is going to be an interactive session, and there are going to be pop quizzes flying around here and there, and I'd encourage you to engage as a group as we share insights and learn together. So I do like to try and bring a bit of fun into the workshop, and really we do rock an 80s theme in our business. This is really what I have on my desktop. So there will be a prize for the most interactive attendee. So really, I like to get you guys to engage with me, and you can do that through the chat box. So I'd like, if it's possible, for you to give your mobile phones a rest during the workshop, and I'm sure your mobile phone will also appreciate it as well. So let's get started. I'd like to encourage you to say goodbye to all those messy spreadsheets. You know the ones that might be squatting on your desktop or hidden amongst a bunch of folders, or that sneaky email amongst that email thread that you just can't lay your hands on just when you need it. A bunch of photos or videos that are scattered a bit here, they're scattered a bit there, relating to that property deal that's beginning to all blur into one. Does that sound familiar to you? And if so, please put a comment into the chat box, let us know it's working, firstly, and also it resonates with you. Now, you can engage with me through the chat box as we go along, and I will take your questions as they come in order. And feel free to ask me anything. So let's bring some high energy into the session, not the bouncing off the ceiling type, but the more of the Qigong type, the more focused, measured, Kung Fu master style. And I'll try and bring systems to life and simplify it for you. Okay, so if you're looking to grow your property business, attract great investors, secure more deals faster, then you are in the right place. This is all the good stuff that we're going to cover. And of course, let's roll into gifts, because we all love a gift. And I have a goodie bag for everybody, which I'll be sharing at the end of that presentation. And that also includes Jack and all of the speakers, because as Chinese, we like to be all inclusive. So everybody walks away with something. If you're getting value out of this presentation at the end of the session or at the end of the workshop, please do leave a comment on Facebook. That's where we live, and feel free to tag me in. So a little bit about myself. That's me. Often people say to me, Stephen, you look very, very young. I'm actually 106, but I look about 12 years old. I have to thank, as always, my mother for those wonderful, good Asian genes. And if you were thinking, can you get a half-price bus fare? I can, but I try not to now. As a responsible dad, I try to teach my little one the right ways. So a little bit about my sort of background. So I am a corporate escapee, and several years ago, I ran a global sales team. And along the way, like many of us, I started a family, and that's my little one on the left-hand side. And what I found was when I was, a new dad, that 3-hour commute, missing bath times, it didn't really fit so well. I was wanting to spend more time with the family, but I just kept on, missing those special magic moments. And also along the way, I became an accidental landlord. And I found that for me, my property was making more money than my day job, no matter how hard I was working my day job. And that was really where it's the first signs. The first signs maybe that I wanted to get out of this rat race. There's my amazing mother. That's my mum on the right-hand side. And I'm a carer for my mum. And sometimes as an elderly parent now, she requires assistance. Now, I'm not sure whether you care for an elderly member within your family or you know someone who does, but sometimes when the job isn't flexible and there's friction, it becomes very, very challenging. And balancing school commutes with the corporate responsibilities, it just didn't work. So therefore, I needed at that point to make a career change. So what did I do? Well, I packed my bags off and I went off to property school to get properly property educated, which is a bit of a mouthful. And what I found personally was that property school gives you the knowledge, but it does take time to implement and apply. And it felt like I left my old job only to jump into a new one. And yes, I was working for myself, but much, much longer hours. And what I found was knowledge alone wasn't enough. I still had challenges. And these are some of the mistakes that I made. I'm not sure whether you recognize some of them. So firstly, I literally had post-it notes coming out everywhere. I was relying on the age-old memory, spreadsheets, emails to keep track of everything I needed to do. I was disorganized. I didn't have the right systems in place. And secondly, I was winging it. A lot of the time I was making it up as I was going along. It wasn't being particularly consistent and missing out important steps because I was relying way, way too much on this memory again. And looking back, I probably was coming across as unprofessional, to be very open with you. Not ideal when you're talking to investors or vendors or other property professionals like you guys. And thirdly, I didn't have any help. I was feeling overwhelmed. I had more leads than I could handle, and I was doing everything myself because I couldn't figure out how to get stuff off my plate. And worst of all, I wasn't focusing on my income generating my tasks, my IGTs. So it took my wife, Kitty, to remind me, hold on a second, Stephen, how did you solve these in your old job? Didn't you have systems in place to do that heavy lifting? Didn't you streamline that repetitive stuff that you do every day? Didn't you build a team around you to give you that support? Why don't you apply your previous experience, in particular, that thing you call CRM, and use that in your business? And that's why she's the clever one. Okay, so let's discuss the big elephant in the room. What the heck is a CRM? Now, a CRM stands for Customer Relationship Management. Now, in property, you may not have any customers. So often I like to refer to it as a contact relationship management because we all have a ton of contacts. Now, it's better known as a tool in the sales world, but you can apply the same principles into your property business. And if you're not familiar with CRMs or come from CRM land, have you noticed these popular CRM names I'm sharing with you on screen, they're not really that helpful. So here comes the first pop quiz question, just to keep you guys on your feet. Is anybody currently using a CRM? And if so, please post into the chat box which one you're using. Most importantly, why did you choose it? What do you like about it? And what is it that maybe could be better? I really appreciate some of your thoughts and feedback. Okay, some of the common reasons not to start using a CRM when you begin your business is what people have said to us. It's scary. I don't know where to start. You can't download the solution. And what you get is this blank page when it doesn't really fit and what's supposed to happen next. So what you do is you press a few buttons and you click a few links and it becomes overwhelming. You don't know what you're doing and you quickly log out. Does that sound familiar to you? And if so, feel free to post a comment in the chat box. Let us know that this resonates. Now, here are some of the reasons that any business should use a CRM. Let's take time. You're super busy focusing on all the demanding things in your property business. Does your system allow you to collaborate and delegate? Because if not, you're going to be doing all of that stuff yourself. Stuff, the repetitive stuff. Maybe you could use something that everyone's familiar with, templates. Why? Well, if you're using template, all your correspondence is going to be a lot more consistent. It's going to raise your perceived profile and you yourself are going to appear to be much, much more professional. And these are the reasons to use CRM specifically within property. Now, the big two are networking to find finance and deal sourcing or finding deals. Those are the two most common challenges, but there are other repetitive activities. Maybe it could be developing deep, meaningful relationships with your investors or your vendors or your agents. Now, with the interest of time today, I'm going to focus on the big one, which is actually finding deals. But we have a whole workshop on all the other good stuff, but today we're going to be focusing on the finding deals piece. So here comes the first pop quiz question. How much time and energy are you spending on finding deals on a daily basis? Just put a number in a chat box. Maybe it's 30%, 40%, 50%, up to 60%. Put a number in a chat box, let me know. Okay. So here are all the good reasons for using a CRM to help you find deals. Whether you know it or not, this is all the stuff that you're currently doing in your business or you're about to start doing if you're at the start of your property journey. And that is if you're super organized. But come on, let's be realistic. You're doing probably a whole lot more. There's all that stuff, the constant background noise, the personal stuff, the family commitments, and all this stuff you're trying to juggle. You run the risks of deals beginning to fall through the cracks. Now, if you're not already overwhelmed, you soon will be when the business starts to grow. Getting things set up from the start will ensure you never have to experience the pain that most business owners go through. I don't want that to happen to you. So these are the three most common challenges we see time and time again, whether you're in a startup phase or the scale-up phase in your business. Now, without the right systems, you're going to be disorganized. Without a clear process to follow, you're going to be winging it. And without any help, you'll soon become overwhelmed. Combined, these three challenges, we call them the three petals of pain. You run the risk of losing money, wasting valuable, precious time, and limiting your true potential. So let's look at what life looks like without the right systems in place. So are there some telltale signs that you're disorganized? Post-it notes on your computer, phone numbers and conversations scribbled on a piece of paper, maybe a ton of browser tabs open on your laptop. You're trying to remember who you've just spoken to, what you've got to do next, and that is in your organized office. But it's going to be a whole load more painful when you're out and about and all you've got is your phone in your back pocket. Does that sound familiar to you? And why is that? Well, let's take a look at all of the stuff that you need just to get one single deal across the line. So there's the deal itself. That's the property address, the asking price, the strategy, headline figures like return on investment, refurb cost, you know the stuff. Then there's a stack of documents. There's photos from your viewings, the floor plans, the EPC reports, spreadsheets, analyzers, contracts, offer letters, investor packs, and the list goes on. And some of these also might require signatures. So now you've got emails flying back and forth and you need to file that away somewhere safely. And to pull all this deal together, you're probably having multiple conversations with a ton of people. Maybe it's the investor, the vendor, the estate agent, the mortgage broker, the solicitor, and maybe the members within your power team. You're talking to people over the email, over phone calls, text messages, face-to-face, and the natural place to keep all of that information is in your head. Now, you might feel that you don't need a system until you've secured a number of deals, but these are the critical details that matter regardless of how many deals you're juggling. Now, here comes the Pepsi challenge. Now, let's scale that up. So maybe today, you've got one or two deals that you're handling, but can you handle 3, 4, 5 deals at a time? Unless you're super organized, it can easily become overwhelming. Life can get messy very, very quickly. Does that sound familiar to you? What you need is a system. And that system, your must-have system, in my humble opinion, could be a CRM. So how does a CRM help? Well, it gives you a home for everything related to your deal. The property details, the documents, the conversations, and people. They all live in one place rather than here, there, and everywhere. Your CRM should be the brains in your business. Give your brilliant mind a rest. Let the CRM do the remembering for you. By capturing all your deals, documents, conversations, and people in one place, they combine together to become your one version of the truth in your CRM. So what does a deal look like in a CRM set up for property? The first thing you'll notice is that everything is laid out and organized just the way you need it. You can see all of the deal details at a glance. They all have a home. No fumbling through spreadsheets. You can see the property address, opportunity value, number of room, purchase price, and all of the financials in one place. And you're only one click away from every person involved in the deal. That's the vendor, the agent, the investor, the mortgage broker, architect. It doesn't matter how complex the deal is, everything's in one place. So if you need to get back in touch, you can pick up exactly where you left off. Likewise, you've got all of the documents attached to the deal. So no digging around for that to find that floor plan, the EPC report, or the photo to confirm that the roof was slanted and not flat. Everything is in one place. And finally, for every deal, you can see what you've done and what you need to do next. This is your deals to-do list. So no more post-it notes or missing out on important reminders that might just get lost amongst the noise. Rather than hunting around on your email inbox or on your phone just to find that all-important email that just doesn't seem to want to be found just when you need it. Instead, all your emails are here attached to your deal. You can see at a glance who said what, when, and how. Let's take a look at what life looks like without consistent processes in place. Now, you might come across as unprofessional, which is not ideal if you're attempting to attract those investors. You might miss out important steps because you're relying too much on that age-old memory again. You run the risk of losing deals because you're not consistent, which takes you longer to achieve your results, preventing you from scaling your business. So how can a CRM help? Well, it gives you a framework to follow. Shows you at a glance the progress of every deal, what happens next, the who, what, and the when, and the reminders to follow up. And it does all of that for you with a pipeline. But the question is, what the heck is a pipeline? So a pipeline is a repetitive process or a workflow broken into a number of stages. And underneath each one of those stages, there are a set of activities. You complete each one of the activities before you move on to the next stage. And in doing so, you remove the risk or eliminate the risk of anything critical falling through the cracks. So here's a great example of a pipeline, and it shows how a deal will progress through it from left to right. Now, 90% of people, they don't use pipelines. Instead, they wing it, or they rely on their memory far too much. And this is where the real power of pipelines comes in. You've got a repeatable set of steps to follow, no more winging it. And the more often you repeat the process, the more confident, polished, and professional you'll become. And as a result, your success rate will increase. You'll secure more deals, and your business will grow faster. So what does a pipeline look like in a CRM? Well, it gives you a high-level view of how the business is performing. You can see at a glance the progress of each deal, where to focus your efforts, and ultimately how much money each deal could be making for you. Now, without a pipeline, you can't see any of this. It's probably a finger in the air, or maybe a gut feeling, or you've got to spend a ton of time pulling it all together from different places. And that's no way to run a profitable business. Now, as the deal moves through the pipeline from one stage to the next, tasks are automatically created for you. The pipeline provides the framework. No more thinking about what you have to do next. Just follow the pipeline to get the deal across the line faster. And in doing so, you're removing the risk of missing any important steps and saving yourself a ton of valuable time. Now, I just couldn't give you this presentation without introducing one of my favorite 80s movies. Yes, it is The Karate Kid. Now, it helped me understand the importance of mindset. And what I mean by that, I see some people smiling there, so these are the people who probably have seen the movie, is how you do one thing is how you do everything. Now, if you've not seen the movie, I'll just try and paraphrase for you. Daniel-san, our unlikely hero, is on the left, and he's having a super tough time. He's getting beaten up by the school bullies. That is the problem. He eventually meets Mr. Miyagi, the guide, and Daniel-san, he wants Mr. Miyagi to teach him a ton of moves, and these are the distractions or the shiny pennies. Instead, Mr. Miyagi, he teaches him the one move, the wax on, the wax off. Why? It takes practice to master the process. And in this case, the process is the low-hanging fruit. So whatever that might be for you, whatever that means for you, maybe it's your first deal, maybe it's your first £1 million deal. It's the one thing that you do over and over again. Now, if you keep practicing without getting distracted, you will eventually get one of these over the finish line. Get paid, feel great, build your confidence, and generate traction in your business. How you do one thing is how you do everything. Now, what does life look like without no one to help? Well, as a business owner, we do too much ourselves. This is the main reason why businesses fail. As a business owner, we have the inability to let go of everything we're doing because we believe it's quicker to do it ourselves, or it's cheaper to do it ourselves, or no one can do it better than ourselves. Now, unless you're able to get stuff off your plate, you'll be distracted. You'll quickly become overwhelmed. And worst of all, it prevents you from focusing on your IGTs, your income generating tasks. So how does the CRM help? Well, by getting everything out of your head into a system, you've created one version of the truth. Your CRM becomes the brains of your business. By putting everything you need into a pipeline, you've created a framework that anyone can follow. And by combining both of these missing parts in your business, the system and the process, you're going to outsource the grunt work and finally get it off your plate to start working on your business and not in it. Now, this is where the power of pipelines can really transform your business and your life. By using a pipeline, you can start to identify what work you can get off your plate. Now, everything disappearing on my screen right now is work you don't have to do yourself. By outsourcing your grunt work, you can save yourself hours on each deal. Time you can spend doing what you do best. That might be closing deals, developing relationships, in my case, watching far too much 80s TV, or sitting on the beach sipping on those pina coladas. Now, if you do this right, you're going to put yourself within the top 5% of property investors. And it's what you should be aiming for. Now, most people, they don't use pipelines. And most people, they don't outsource. But by combining the two, you're going to give yourself a huge competitive advantage. 70% of the stuff you're doing today, you can easily get off your plate. The remaining stuff is the critical stuff that you should be focusing on. This is how you scale your business. Free up your time, focus on your IGTs. And it's not to forget what you really want to do with that extra time. Maybe it's to do those cocktails on the beach, or maybe it's family time. Time is the one true currency. I'd like to just introduce you to one of the guys. His name's Mark. And what did Mark want to do? Well, Mark, he wanted to spend more time with his new family, and he wanted to grow some organic vegetables. I want to share with you his story.
I was getting quite a few leads coming in, and I hadn't any systems or processes set up, and I was getting to just the stage of overwhelm. Just there's so many points of contact in each deal that I was missing vital parts out, and my communication wasn't good, and I knew if I was going to continue in this business, then that had to be fixed. So I was winging it a lot, and I was leaving out. I was missing steps along the way, and every deal that was, or every lead. So now that's all eradicated. It's the steps are there. Each time I follow the same steps, so I don't miss anything. I get reminders. There's no way I can miss it. And actually, as a knock-on effect from that, I'm improving every step of the way. Because I'm not winging it, I'm actually doing the same thing over and over again. So every time I do it, I'm actually getting better at it. My confidence is growing, and it's now showing on my close rate on deals. I was closing, I think it was like 1 in 20. I'm now down to like 1 in 8. Which I hope to get it down to about 1 in 5, but sure, 1 in 8 I'll settle for.
So a big thank you for Mark there. So a few things that Mark mentioned: better communication with vendors, agents, and investors. An improved process, no more winging it. Increased confidence, following the same steps over and over. Double the close rate from 1 to 20 to 1 in 8. Double the income by closing more deals. And of course, the real tasty result for Mark is that he's had more time to spend with his family and grow those organic vegetables. He tells me they are delicious. I'm sure they are. So just to recap, I've shown you how a CRM can benefit and support your deal sourcing activities, from chaos to clarity, a home for everything related to your deal. From winging it to using a framework, the progress of every deal, the who, what, the when, and reminders to follow up. From overwhelm to outsourceable, leverage the system and the process, get the grunt work off your plate, focus on the one thing, and get paid. So the most common question, or one of the most common questions, is, I've invested in education, maybe I've invested in my compliance, and I've got to invest in systems. Should I do it now, or should I wait until I've got some money? So here's maybe a share with you. If you do it later, by the time you're likely to get needing systems, you already might be overwhelmed. And then there's no time to put systems in place. Sometimes later doesn't even happen. But if you do it now, you're going to use this precious time without any distractions to lay your foundations. When the deals start flowing, you're leveraging the system to close more deals. So this is the piece that I want to bring you guys onto today. Here's the 10 steps if you want to set up your own CRM for property. Step 1, you're going to need to choose a CRM. Now, this is often the first hurdle that people struggle with. There's so much choice out there these days. It's hard to know where to start. You can waste a shed load of time downloading and fiddling with different CRMs, but don't worry. At some point, I will show you how to choose exactly the right CRM for your business. Step 2, you've got to learn how to use it. I know it sounds obvious, but if you're investing time and buying a CRM, you need to know how to get the very best and the very most out of it. Step 3, it's time to clean up your contacts. I call these the 3 C's: contact, consolidation, cleaning. It's time to bring together all your sneaky contacts. You know the ones on your phone, the dusty shoebox of shame, the business cards, maybe at the back of the sofa, and give them a good old clean before you put them into your CRM, because if you put rubbish in, you get rubbish back out. Step 4, it's time to create templates. If you want to save yourself a whole heap of time, you're going to want to start using templates. What sort of templates? Email templates, contract templates, deal brochures, offer letters. These are great examples of templates that you should already have that you can plug into your CRM. Step 5, map out your processes. It's time to take a step back, empty your head. What makes your business tick? What repetitive stuff are you doing over and over again? What could you get off your plate and instead give someone else to do for you? Step 6, design your pipelines. Or at the very least, you're going to need 2 pipelines. One to find finance. We call this the investor pipeline. And the second, to keep track of your deals. We call this the deal sourcing pipeline or the find the deals pipeline. Step 7 is now ready for you to figure out or configure your CRM. Now, a CRM off the shelf won't cut the mustard. You'll need to configure your CRM specifically for the industry or the sector you're in. In this case, it's property. But more importantly, you want to tailor it exactly for your business, just like a Savile Row suit. Step 8, time to onboard an assistant. If you want to take your property business to the next level, you're going to need to grow your team. You should be focusing on your IGTs and not the grunt work, the day-to-day grunt work. Step 9, now you're almost there. You're ready to rock. You've got your superhero cape. You've got your hand on your hip. You're about to do the shimmy. It's time to use it or lose it. Remember, any system should be measured on its return on investment. So don't let all that hard work go to waste. And step 10, refine and improve. Now this in many ways is one of the most important steps, if not the most important step. It applies not only to the systems you use in your business, but to your entire business. If you don't take the time to review, refine how you're operating, how can you expect to improve and grow your business? Now, I am mindful that 26 minutes just went by just like that. And we squeezed in as much as we could in this particular session. But I'm mindful that there's a lot more, and there's some amazing speakers that are coming down the line behind me. So what I'd like to do is to offer everybody a special takeaway. We have a deep dive workshop that takes you from the 10 steps where I just left you, where we go deep into those details. How deep? Well, if you like Eddie Murphy and Beverly Hills Cop, we take you real deep. And Jack has kindly asked whether I could arrange a super bonus for everybody on the session today. So I'll be happy to offer all attendees a complimentary free seat. So that I can get a feel whether this might be of interest to you. Can you just put a Y in the chat box if that sounds something of interest? And again, to reiterate, it will be completely free. Our next deep dive workshop, it will be organized for Wednesday, the 3rd of September at 8 o'clock. And if you just give me a second, I will basically post the details of that into the chat box right now. Just bear with me.
I was going to say, Stephen, if you want to leave your link for people to book in, because it seems like you're getting quite a lot of yeses there.
Thank you very much, Jack. I'll put it here, and hopefully I'll put it in there anyway, but I'll leave it up there for the time being. Yeah. So just a few things to share with you, and thank you very much, Jack. I really appreciate that.
Thank you. Thank you. Now, I believe honestly that without systems, no business can actually ever scale. I'm a very much a systems person. I'm very much geeky when it comes of, creating systems and all of that. Not a techie, but you know what I mean? But I really do believe systems are absolute essentials when it comes to scaling your business. But go ahead.
So what I was going to say or just share with the group is that I speak at a lot of these online events. Again, I'm delighted to be supporting Penn here. This is my second time around. I'm enjoying it. You just got a great community. But the workshop, it's limited to 100 seats. And I've got a couple of events that I'm speaking at throughout now to the workshop. So once the seats are gone, they are gone. But what I don't want you to do is to rush off and do this right now. Wait until the end of the event. Just take the details which are posted in the chat box or what you see over there. And just also to give you a sneak peek of what we're going to be covering. It's going to be an hour of pure content and insight. So if you enjoyed what I've been sharing with you today in bite-sized pieces, I've tried to make systems sexy and simple. And I hope I've done a good job, but do let me know. I'm always open to improvement here. Also, they'll be followed by 15 minutes of what we can do to help you if you like to come along. Now, this is where I'd like to do a few things. First of all, I'd like to thank the host of this event for making this all happen. They did all of the heavy lifting. I just rocked up and just did the easy part, which is deliver that content. So first of all, thank you for Jack and the Penn team. Again, if you got value out of the session, please maybe put a post and just tag me in that Stephen Live with a V. and also your host, because Jack does a lot of this great stuff, and we just rock up and we just share some good stuff with you. Please also share with me any of the aha moments or your favorite takeaway. And this is really where I give you the mic drop and hand it back to the host. I'm happy to take any questions. And I just wanted to ask Jack, if it's okay, maybe I'll give you an extra set of prawn crackers. There's a group with a load of videos for CRM that I've created. Would it be okay to post that in the chat box?
Of course, yes, please go ahead.
Thank you very much. So hold on a second. I'm just going to post that for everybody. Just bear with me. And then I can just take questions. If someone would like to ask me any questions, that's the bit there. And again, I'll post the registration for the link, and then I'll come out of screen share. So if there's any questions, feel free to fire them off. And what I don't want to do is I don't want to take over too much of this session for the next speaker. Okay.
Thank you, Stephen. Once again, thank you for being with us here. Those who have any questions for Stephen, please do write them in the chat box and he would be able to answer them for you. Again, thank you for being with us here and presenting that information. Like I said, I'm a big believer in using systems to scale businesses, and that's how it's got to be done. Thank you once again. Thank you. All right, guys, I want to make it a bit more energetic for you all. So I'm actually going to go myself this time. I'm going to just share some few pointers with you. I'm going to show you how to find below market value deals very quickly within like 5 minutes. And like I said, I'll share some more pointers with you. And this is something that I might literally say this every single time when I do an event. And that's because I've kind of lived a life where I had barely anyone around me who trusted me. And I had to prove myself at every step of the way. And I literally know how it feels like to be at a point where just no one believes in you. No one believes that you can do it. And I am a big believer of human potential. I literally look at anyone and I know that if I can do it, so can you, so can that person, so can you do it. So if you're watching, you're listening to me, and I'm looking into your eyes and I'm telling you that if no one has ever told you that you can do it, I'm looking at you and I'm telling you that you can do it. And then you have all the potential in the world to be very, very successful. I literally am looking into your eyes and saying, you can do it. I believe in you. Like I said, because no one believed in me, I want to look at people and say, I believe in you, because I know what human potential is like. And that's how it's gotta be. You know, you gotta believe in yourself. You gotta look in the mirror and say to yourself, I can do it and I can make it happen. And not just say to yourself, but go and do the work, put in the hard work, put in the smart work, put in the hours. And that's how you get success. That was just a couple of minutes of my trust in you. So yeah, like I said, I'm going to share some pointers with you. At the core, I believe every time when you listen to a speaker, they talk about strategy. And when I look at property business, I believe strategy is absolute key. Either when it comes to personal branding, your personal branding, or your professional branding, or your positioning in the market, strategy is absolutely key, because I come across so many people in property industry where they're actually chasing their tail. What do I mean by that? They are literally all over the place. One day they're looking at land deals, the next day they're looking at BTRs, the third day they're looking at HMOs, fourth day they're doing something else. And they're literally all over the place. They're dipping in Bitcoin, they're going into network marketing, they're literally all over the place. If you really want to make it in any business, let's say in property business, for this, for the sake of this context, if you want to make it in property business, you gotta find a way to create your products or services as unique as possible. I'll give you an example. What do I mean by that? If you have, let's say, 20 estate agents in your local zone, and you become the 21st, do you think you're gonna make a lot of money? I mean, it's just bloody competition. You are really going to struggle with that. But people ask me, so what shall I do? Well, you got to look at it this way. When you come into property business, you got to look at your region. First of all, stick to your proximity, stick to your region. Don't say you source all over the country, or don't say you provide services around the country unless your product isn't kind of like that, like the CRM system can be used all over the country. But if you are providing a service or a product that is unique to a region, that is more attractive to someone rather than someone saying, I provide service up and down the country. If you're an estate agent, you can't say you provide properties all over the country. You gotta say, you know what, I specialize in this region. Now that's your strategic position, your strategic location. But at the same time, you got to find a unique position for yourself. Now, what do I mean by that? This is really business positioning. I'll give you an example. Let's say someone says, I want to open an estate agency. And you go and search, there's already 20 estate agents in your local region. Well, why don't you go and search if there's an estate agent that is focused on land deals? If there's an estate agent that is purely focused on new build selling? Is there an estate agent that's purely focused on rent to rent? Is there an estate agent that's really just focused on HMOs or whatever, service accommodations, guest houses, and so on and so forth, right? There's many different strategies in property business that potentially anyone can focus on, but you got to look at your region and say, is there anyone properly focused on this one specific strategy, right? And then you got to look at the supply and demand, and then position your business in your region. That's how you create strategy around your business, and that's how you position yourself correctly and more uniquely in your region. And like I said, this is a kind of a learning curve or a mistake, whatever you want to call it, but I like to call it learning curve. I come across more people making this mistake or going through this learning curve than anything else. And I just wanted to come and share this with everyone that, look, you got to position yourself strongly in a specific niche for you to be able to create a strong personal as well as a professional brand. That is key, because as soon as you pick one certain kind of position and people just know you by that positioning, you'd be surprised at how many people are going to approach you and say, you know what, could you please help me with that? Because then you become the expert in your position, in your space, right? And that's something that, like I said, a lot of people make this error and they're going through this learning curve, but you got to position yourself right, because if you don't, it's literally chasing your tail. You're literally all over the place and you just never get enough traction and you never get enough business because people just don't know what you do and they cannot recommend you business. We tend to get about, at least, if not about 10 recommendations a week, just because we're positioned right. People know me as the finance guy. They know me obviously as a techie behind the PEN and other bits and pieces, but mainly they know me as the finance guy, as the debt broker. And that's why people come to me and they recommend me more business and so on and so forth. So you got to position yourself right in whatever you do in property business, and you got to do your research to be able to find out if there is enough competition in your category or not. So the supply and demand in the first place. That is very much the key. This is something that I, like I said, really wanted to share this with everyone. Otherwise, building your personal brand becomes a lot more tough. When you are positioned correctly, building your personal brand becomes a lot more easier, as well as it's just, like I said, you are going to get so many recommendations when you are positioned correctly. Also, I believe working on your personal brand is key. If you're not working on your personal brand, writing a book like, Paul Mahoney just shared with you, I have my book on Amazon, for example, and as well as that, we work very, very heavily through multiple tactics and strategies to expand our personal brand, which is very much the key. And I believe in this day and age with social media, working on personal brand has just never been more important. I'll share with you a quick story. Back in the days, this is 2014, when I sold my business, when I used to run a chauffeur company, a transport company, and when I sold that company, and when I came out of that and I started consulting business, just literally no one out of that business knew me. And that's when I really started to learn about personal branding and start to work on it, which is what now you see Jack Dawhra and PN is all about. And obviously I'm saying this with a lot of humility, but working on your personal brand is very, very important. Also, when you find the right positioning, make sure that you dig deeper rather than wider, initially at least. You have one product or one service, make sure that you have enough depth, enough depth to your positioning as well as to your service and product before you start to go wider, which means adding different products and services to your positioning. That is very, very important. Again, this is a learning curve, a mistake that I see a lot of entrepreneurs making this mistake. I like calling it a learning curve, but make sure you go a lot deeper in your positioning before you start to go wider and start to add more products or services to your business. Also, I believe we live in a day and age where networking has never been more important. So doing networking is very much the key. It's almost like you gotta be the beast in networking. You gotta learn really, really heavily how to network and expand your network to be able to grow your business and scale your business. And you have a great opportunity there for you to network in the chat box, share about yourself, get to know about other people. So do network as this event is going on. Thank you, Roger. Thank you for this. Also, like Stephen explained about the CRM and using technology, I believe using technology plays a major part in being able to scale your business. So make sure you use technology every step of the way. Otherwise, businesses almost become impossible to scale. And I've led well over, as far as I can think, well over 10 businesses in my life. I even used to manage my dad's business back in the days. So I can assure you that without systems in place, it's almost impossible to scale any business at all. And through consulting as well, I've consulted many, many businesses in my life. I can assure you that without systems, it's literally impossible and overwhelming. Again, Pen is a prime example of automation. We have pretty much most automated system in place to manage deals as well as to be able to source properties and so on and so forth. Again, a little bit about me. Most people might already know this, that I came as an immigrant in this country back in 2000. This is a little over 20 years ago now. And I started with nothing to a point when we now own multiple properties, as well as we lead the Property Entrepreneurs Network, which is a property tech social platform. We're also launching the social media features in the next couple of weeks, where you'll be able to interact with investors and other property professionals from all over the world. And I've been to a point where I've woken up with not enough money for breakfast, and we've been able to get to this point. And that's exactly the reason I share this story, is because I believe if I can do it, so can you. We also invest in developments behind the scene. We invest in flips behind the scene, and so on and so forth. We have 20 company representatives up and down the country now, and many of them are actually here helping us in this event. For example, we have Jasim. He's hosting the event. At the moment, he's managing all the tech behind the scene. And there are a few more that I'm going to introduce in the event in a bit. Now, let me ask you one thing, which is, okay, in fact, before that, let me share with you very quickly my screen on how to be able to find below market value properties in literally about 5 minutes. Let me just try and share my screen with you guys first. Give me a thumbs up if everyone can share my screen with Zoopla. Thank you. Thank you, Jasim. So I'm actually going to do a search and share with you a very simple tactic on how to find below market value properties day in, day out, every single day. I'll give you an example. Let's say if you're about to purchase in the next 5 years, £1 million worth of properties, and if you can find below market value, let's say about 10% as a very conservative figure, you can find 15, 20%, sometimes even more. But 10% is literally something that I'm actually going to show you how to find below market value properties. If you were buying £1 million worth of properties in the next 5 years, you can potentially save yourself £100,000. If you are buying properties worth, let's say, 10 million in the next 10 years, you're going to save yourself £1 million. And if you're buying somewhere in the region of 100 million, you can potentially save yourself almost £10 million just by using this tactic that I'm going to share with you. And if you have any questions, you can ask in the chat box, but I'm just going to do a search on Zoopla. You can do the same with Rightmove as well. I'm just sharing, I'm just searching Slough. That's where I live. Property type, let's say houses, bedrooms, let's say 3+. You look at advanced search options. Like I said, you can do this on Rightmove as well as Zoopla. I'm going to do a 3-mile radius search. And then I'm going to remove the retirement homes as well as shared homes. And if you look at sort by, it gives you an option by called most reduced. Can you see that? Say yes if you can see all this. And then if you click on search, it shows you all the properties in that region by my search that have been most reduced. And if you look at the top one here, it's been reduced by 25%. Can you see that, guys? Say yes in the chat box. Now you might turn around and say, maybe they started with a bit higher price. I would say even if they started with a bit higher price, it would have been no more than 10. And then this property is more likely to be a below market value deal by about 15%. Now, if you look at the next one up, it's reduced by 21.4%, another one by 21.2%, and then another one by 19%. If you can see it on Zoopla, you can do the same search on Rightmove as well, and on many other online channels. 18% there, that's 17%, and the list carries on in reducing numbers. So this way, you can very easily go and find below market value properties that are shown you literally in 5 minutes and save yourselves hundreds and thousands of pounds by just doing the search, calling up the estate agents and negotiating these, because many of these are going to be motivated sellers. And that's exactly the reason they've actually reduced the property prices. One of the questions that I was asked earlier was, how can I find motivated sellers? Well, that's one of the many strategies that you can use to find motivated sellers. Within the same search, another thing that you can do is, and you know where you see sort by, if you click on most recent, and then it's showing 1,031 properties. If you go to the last page on the search, so the last property, so there is 42 pages, and I'm going to go to the last page and see the last property. You can also create alerts on Rightmove and Zoopla for your search. So if there is a property added according to your search, you'll get a notification email. But I'm looking at the last property in the search, and if I click on it, if I was to scroll down, you can look at this property. It's been on the market since March 2017, and it has been reduced by £15,000, as you can see on the screen. Do you think this seller by now would be motivated? Well, many of them would be, but this one I think would be motivated to sell, because this property has been on the market for over 3 years now. So if you go back to the list again, and if you keep scrolling up, these are the properties that have been on the market for the longest period of time, making some of these sellers very motivated to sell. Very, very simple tactic on Rightmove and Zoopla to be able to find motivated sellers as well as below market value properties. Like I said, you can do this on Zoopla as well as on many other platforms. I'm actually going to stop sharing my screen now. So say yes if you learn something from this very, very simple tactic. This will allow you, like I said, if you were buying £1 million worth of properties in the next 5 years, this will save you at least to the very minimum £100,000. And if you're buying 10 million, it can potentially save you £1 million, and so on and so forth. Literally, it is super, super easy to find these below market value properties and register your interest in your region for the kind of properties that you're looking for on Rightmove and Zoopla, and you'll get notifications. It is very, very simple and not very difficult. So that was something that I wanted to share with everyone. I hope that really helped you out. Sorry, I'm just playing with my screen to be able to pull out the next notes. If you would like to learn more about some of these tactics and strategies, I'm just going to give you the link to my YouTube channel where we share these tactics and strategies many times. So subscribe to my channel, to our channel, and then you'd be able to get a lot. In fact, on our channel, you're going to find tens of hours of content that will help you grow your property business and your portfolio. And you can watch that at your convenience. Now, stick with us, stay with us till the end of the presentation, and I'm going to share with you a few gifts that will again help you grow your portfolio, help you grow your property business as well. Now, if you would like us to help you in the process, grow your portfolio and your property business, and if you'd like to collaborate with PEN, send me a WhatsApp message on, I'm going to leave my number there. I just gave my number in the chat box. Send me a WhatsApp message calling it session, and we will give you a strategy session on how to grow your portfolio and your property business as a gift from PEN to you that will help you. So send me a WhatsApp message now, and we'll go from there with the word session. Now, I'm actually going to give you one more gift, and then there's going to be another gift that will be followed. If you would like me to give you a guide on how to find, guide on 100 ways to find investors, send me a WhatsApp message on the same number saying guide with the word guide, and I will share a guide with you on how to find 100 ways on how to find investors that will help you invest in your projects, as well as buy property deals from you. 100 ways to find property investors. I will share that guide with you, and then we will go from that point. Send me the word message saying guide, and then I will give you that as a gift. That's all from me. Now I'm actually going to invite a very, very good friend of mine. He's become a very good friend. He joined us as a representative quite some time ago. I think it's been 7 or 8 months now. He's an amazing, amazing human being, as well as a very, very hardworking person, as well as he has loads of qualifications to back up his skills. And he's the one who is actually hosting. So when I say hosting, in the sense he's literally looking after all the tech and managing all the tech behind me. And he's a project manager. He leads a company called Promarco Services. He's a project manager. He's also working on doing his own developments as we speak. He also consults many clients behind the scene on how to being able to find the right kinds of deals, how to be able to analyze those deals, and a lot more. If you don't know him, he does these Friday nuggets that I see a lot of people getting excited about. So please help me welcome Jasim Kazi. Thank you, buddy. Thank you for being with us here.
Hi, Jack. Hello, everyone. Thank you for having me. And Jack, that was a massive build-up. I hope I do justice of what I'm going to share today. So guys, today, while we do a lot of things, I just want to share with you and talk to you about how we do our due diligence process, what we look after in due diligence. And I just want to share a few minutes with you on that. I hope all of you can see my screen. If you can just give me a thumbs up, that will be great. Oh, thank you, Jack. Yeah. So today we are here to talk to you about when you're evaluating a deal or an opportunity, what do you need to consider, and how do we go about how do we look at things? Noreen, if you don't mind, can you stay away from the screen? You're making a mark on that, please. By definition, what is due diligence? Due diligence is nothing but investigating into an opportunity or a product that you intend to buy or pursue. Can it be 100% watertight or airtight? No, it can never be. So there will always be something or the other that you will find out throughout your journey, and you will look for it over a period. But in the beginning, you can be as watertight as possible, but never 100%. So the process flow that we follow for opportunity is this following. We start with location. So when I say location, be it a HMO conversion opportunity, be it build development, be it a commercial conversion, you need to find out what are the demographics of the people that are in the location where you are developing your opportunity, where you're going for. So this can be found straightforward from street check. Just key in the postcode, they will give you the exact demographics of people living in that area, for how long they've been living, the type of skills they possess, and the whole demographics in quick purview. You will be able to find that. So that will help you decide type of product. Then you look at how many properties have been sold, the types of properties that have been sold in the area. So you get a perfect example of whether the market has been moving upwards in that area or not, or is it a slightly deprived area. Same street check also gives you a crime stat in the area, so you just know what you're dealing with. So before you even go into the area, you have a complete due diligence of what you're dealing with. Like Jack always says, you need to know the nerve of the area before you even invest into that area. So you have an end product in mind that you create. Now, if you're going with HMO conversion, the end product is your HMO rooms. If you're going with the commercial conversion, the end product is the apartments that you're creating. If it's a new build development, the end product is either that detached bungalow or detached house, a semi-detached property, or a terrace block of terrace properties, whatever that is. So against that end product, you need to check what is the supply in that area and what is the demand for that end product in the area. It should not so happen that you end up creating a product and there's no supply, there's no demand for it, there's excess supply for it, and you just can't sell the product and exit from that. So at this stage, you understand what you have and always have backup strategies, saying because you're still not started doing all your work on the ground, so you can, at the drawing board, you can still work back and find a different approach. Then last but not the least in the location is amenities. So when I say amenities, I'm referring to social as well as other amenities. For example, your Tesco's, Asda's, how close are they? Your transport links, your trains and your bus stops, how close or far up they are, your hospitals. So this not only gives you a perspective of how lively the area is, but it also says, for example, if you go to an area where a new Asda has come up or a new mega store has come up, they will obviously have done their bit of study, research, and that area is going to boom. Like for people who are in a new train station or however that's happening, what's happening over there. So that will give you a better indicator of the location. And the local council regulations. Now, with regards to a HMO, you need to understand the HMO guidelines of that council. With regards to apartments, you need to know the space standards. Even though most follow the national space standards, it's always better to check what variation of the national guidelines is the council following. In terms of new build developments, you need to look at the council's strategy for the next 5 years. So how many houses they intend to develop in that area. And based on that, you will be able to decide whether your development will fit in with the council's requirement or not. The moment you have determined that your development fits in with the council requirement, it's much easier for you to go forward. Moving on to next, the site itself. So now, while the broad parameters remain the same, you have different things you need to do if it's a HMO, if it's a commercial conversion, if it's a new build development. We'll touch upon all of these for each one of the bullet points over here. Surveys. Now, if you're talking about a HMO conversion, you need to ensure you get your surveys done for your structural survey, because what is the condition of the building currently? Asbestos survey, is there any asbestos? And when you do a structural and the building survey, they will also point out to you if there's any knotweed by any chance, even if it is like 2 buildings away or 3 buildings away, whatever, that does have an impact. These surveys are quite important. Whereas when you're looking at a new build development, land contamination survey for one, obviously what I'm listing out is not an exhaustive list, but at the same time, it does give you an indication of what to look out for. When you're looking at a commercial conversion, obviously check first if the building is grade 2 listed building or not, because each one of these have some kind of an impact on your development. So, and when I say impact, it means it's a risk, and to mitigate that risk, you need to add to your cost, and you need to factor in those costs while you're doing that. Moving on to next is the current conditions of the building. Check if you're, for example, if you're looking at a house to be converted into an MO, check the roof from outside, check for cracks, check for damp within the property, check for any mold growth within the property. All these, because if there's damp, you need to figure out where is the damp coming. You need to ensure that is treated before you do your refurb works. If there's mold growth, is it just purely because of lack of air circulation and lack of sufficient heating in the room, or is there something else? So that's something that will help you decide how to proceed further. When it comes to the windows, are they double glazed or not? Because if you're looking at HMO regulations and the guidelines, some councils do specify the windows have to be double glazed. And then moving on to the next, in terms of your room size, what are the sizes of your each room as existing? Because you still don't have an architect to measure up and to tell you this is what you can propose. But you as a investor or project sourcing agent, we should be able to find out how many can this property be converted into. So for example, when we go out to source HMOs for our clients, we do a complete measurement of the property. Even though not 100% accurate, we get an indication of how the layout is, 2 sites, and what can it be converted. So when we convert it into rooms, we know exactly how many rooms can be achieved, and do they meet the local HMO guidelines or not. So next, planning approvals. If you have got an opportunity with planning approval, that's great. If not, are you looking at doing a planning game? For example, a house can be converted into a 7-bed HMO. So you obviously need to go through planning for that. A land can be converted to a block of apartments. You need planning for that. A building can be converted into apartments. It could be under, if it's a commercial, depending on the rules, it could be under permitted development, or you might need planning, depending on where it is and whatnot. So if it does have planning approvals, it's always good to check what are the conditions associated with the planning approval. So you know exactly what you need to mitigate before you can go forward. It's never an unconditional planning approval. You'll always have conditions which need to be taken care of, and you need to apply with further documentation. In very few cases where the seller is highly motivated, he has gone through discharging all the planning conditions and then he's selling the plot to you. But that's not always the case. Parking options. Are there sufficient amount of parking places available? For example, Jack and I looked at a building in Salford, close to Manchester, and it was a beautiful building. It was a pub to be demolished and a block of 24 apartments being built. Turns out there's absolutely no parking provided in the plan. So while they did promote it as a 0 parking, carbon neutral development, you will always have difficulty to sell those 2-bedroom apartments if there's no dedicated parking available. Even so, you have parking in the vicinity, but how close is it to the site? You need to check those things. Moving on to the next, which is the key thing of your due diligence, is the profitability of an opportunity. So you need to have your clear exit strategy, whether you're building to sell, building to rent, or mix of both. Whatever you need to have, you need to be clear, and you need to have strategy A and strategy B, plan A, plan B. So based on that, based on what your exit strategy is, that will govern your revenue parameters. Now, whether you're going to be considering the rental income, whether you're going to be considering the GDV from sale of units. And obviously, what are the cost parameters that you need to factor in, achieve that end product? Now, we normally tend to miss out certain or quite a few cost parameters, So have you ensured all the cost parameters when it comes to purchase, be it the legals, be it stamp duty, be it sourcing fee, when it comes to the actual value add, all the professional fees, the contingency, the build cost, and in build cost, you're very sure, you made sure your builders and your contractors have understood the scope and they have factored in all the parameters within the scope or not. And then when it comes to marketing and selling, the cost for marketing, the cost for legal costs associated with the selling of the units, the Section 106 payments, or anything of those kind for the development. And last but not the least, your finance costs. People normally tend to miss out quite a few parameters in the finance costs when they are budgeting. There could be arrangement fees, there could be QS fee, be any other fee for that matter. So ensure you've done all of that. And after all of that, check your profitability indicators and see if you have sufficient profitability in the deal or in the opportunity or not. And that will help you govern how good the opportunity is. Let me reiterate, this is not an exhaustive list, but just a guide of what we follow. And your due diligence can never be 100% watertight. There will be loopholes. You will find over a period what is happening and how things are going. Thank you guys. Hope you found this useful. If you have any further thing that you need help with, please feel free to reach us. We will definitely be able to help you and help you in your journey. Hope you found this useful, guys.
Thank you, Jasim. I have a couple of questions.
Oh, go on.
One is that where can people get this presentation? So what
Jack, I don't think I'm supposed to answer that question, isn't it?
No. So in fact, the reason I asked him is because Jasim actually prepared these parameters, and I believe that as a property investor, you must do enough due diligence. In fact, there's nothing called enough due diligence, never enough due diligence ever, right? But I believe that you gotta do so much due diligence on your property that you do not make a major mistake or a learning curve, whatever you want to call it, but you will never get a chance if you make a major mistake, right? You're going back a few years if you make a major mistake. And by using something like, go ahead.
Yeah, so basically, I totally agree with what you're saying, Jack. You can, but at the same time, what I would also like to add is you can spend all your time doing enough amount of due diligence and it'll never be sufficient.
It's not never be sufficient, I agree.
Or you can take a calculated risk and move forward.
I absolutely agree with you, Jasim. However, this is what my experience has been, that I come across a lot of people who do a little bit of due diligence, half an hour research, an hour's research here and there, and they think it's enough. While I know personally, and I'm pretty sure, we work closely, we know it takes a good week's worth of due diligence at the bare minimum for a development. Okay?
But you're being very, very, very optimistic there, Jack.
I'm being optimistic again, that's a bare minimum. I said that's a bare minimum. But so if you are looking to invest in flips and HMO conversions or developments and land deals and so on, I can assure you guys an hour or two or a day or 2 days due diligence is not going to suffice. It takes a lot more research than just doing a couple of days of research and deciding on buying a development. It takes a lot more than that. But by what Jasim has just shared with us, if you focus on that, like he said, it's not an exhaustive list, but it is definitely a good starting point and a great guide to go with, because it does cover quite a bit. And something that I actually agreed with Jasim before our presentation is that just because you turned up at this event, we're actually going to give this, what Jasim presented to you. What's the format of this? It's a
PowerPoint presentation.
It's a PowerPoint presentation. So if you would like to see this PowerPoint presentation and have it for yourself, so the next time when you're working on a deal, that you can look at this and do your due diligence, send us a WhatsApp message, send Jasim a WhatsApp message. Jasim, can you actually write your number in the chat box, please?
Yeah, it's there. Just ping me on WhatsApp saying presentation of, or just say today's event, and I will ensure you'll have the slides with you.
And Jasim will be able to. So this is again a gift from PEN and Jasim and us to you, so you can go and grow your portfolio and your property business. So send Jasim a WhatsApp message and he will be able to share this presentation with you, which will help you with your due diligence to a lot of, to some extent. In fact, when I'm looking at this presentation, it does cover about 99% of the ground anyway. So it will really, really help you making sure that you don't make a kind of a silly mistake. We all make silly mistakes every now and then, but it will definitely help you in that process. And if you would like Jasim to give you a strategy session for your next development deal or your flip deal, send Jasim a WhatsApp message by saying session, and he will be more than happy. This is something that I agreed with him. He'll be able to give you a session for, again, absolutely free. And then you can kind of go from there. So again, thank you, Jasim, for once again, for presenting. It's always a pleasure to have you. Yeah, I hope, I'm just thinking at this moment of time that I don't start to take you for granted. So no, thank you once again. Again, your knowledge really, really has helped me. And I know it's helping a lot of people out there. Thank you once again.
Thank you, Jack.
Now we have with us our funny guy in the team. Okay, this is a guy that joined us a few months ago. He's a company representative. He runs a company called ZLR Sourcing. Very, very focused, very much committed, and a family man, as well as the fact, like I said, he's the funny guy in our team, and he does sourcing in the north. So please help me welcome Ledio.
Hey everybody, can you hear me?
Hey Ledio, what's happening?
Hi Jack, I'm all good, glad to be here. Funny guy, that's a funny way to introduce me.
Let me share something. I actually insisted on Ledio to become a stand-up comedian. Now he's decided to stick to property for now, so let's see what he has to say about property. But you know what? You can do very well if you do stand-up comedy.
Yeah, I've just decided to stick from a more entertaining perspective rather than just pursue comedy full-time, I guess you could say. Actually, what I'm going to be talking about today is not really about how to become a stand-up comedian, but it's going to be how, I mean, that's technically speaking a business as well. You know, you will have to structure it in a way that will fall in line with what I'm about to share. But I'm going to be giving you guys the top 6 tips towards creating a scalable business. Before I get into that, I just want to give you a little bit of background on who I am, what I do, where I come from. I come from Italy. I have a background in IT, in database administration, and full stack software development for those who are a bit more tech savvy. And I've come to the UK and started in property simply because I wanted to build myself a business and not just keep on working that 9-to-5 job all the time and not really getting the most out of the time that you're putting in and the effort that you're putting into it, right? Because even if you give it 150% at work or you give it 50%, you're still gonna have the same wage at the end of the month. So we all move towards a business, and I'm sure that many of you guys are here today because they want to be able to kind of create themselves a better financial situation and as many of us have talked about today, property is a business and it should be structured as such. So let's just get started with the top 6. I'm going to be giving you guys a summary of all the tips that I'll be talking about. If you want to take notes, feel free to do so. So let's just get on and get started with them. So tip number 1, everyone needs investors and automation in order to scale a business. So it's important to not only think about ideas that are unique, right? Because it's important that you want to stand out from the competition, but you also have to come up with something that will be scalable over time. One way to scale your business, for example, is using outsourced investment, right? So funds from people outside of your insider network, I guess you could say. So one way to do that in a very, very successful manner is using market research to prove that your business plan moving forward is going to succeed. So also, when your demand is going to outstrip your supply for your business, that's when you're going to have to try to automate to kind of try to leverage the time that you have at your own disposition, because we all have about 24 hours a day and very, very much less after you take away lunch, a little bit of relaxing time, reading, and whatever you have at your own disposition between family and whatnot. So try to automate, either optimize certain processes and trying to make them become a bit more streamlined. And this could be something such as a CRM, right? Like Stephen presented earlier, or try to overhaul it so you can remove unnecessary steps and reduce the time and the resources that are required. Now, this cannot be applied to property, but it can really be applied to absolutely any aspect in life. Number 2 is I'm gonna be talking about focusing on getting these investors on board. So how do you get them? Investors, most of the time, they want to invest in a business that is scalable, because that's going to determine its growth potential. And that normally means it has high margin, it's got low support, and it's got minimum staff for it to be deemed as a very good scalable business. Number 3, that was a pretty quick one, but it's about as easy as it gets. Number 3 is gonna be use what they call in business a minimum viable product. They call it MVP, so that you can test your business model early on, right? So it's kind of a bit of a prototype, right? It'll work for production. And your business model, in a way, is a product, and you must try and deliver it and make it as efficient as possible over time. You will have a few hiccups here and there, but that's part of the process. It's just trial and error all the time, no matter what. Nobody can do the thing completely, perfectly right from the get-go. So you will have to tweak several things throughout your entire journey. So the best thing to do would be to test it, see what works, see what doesn't, and then find out what's more time and cost efficient and how likely it is that it will scale with more money or more time over the long period. Moving on to the 4th one, I'm gonna be talking about building a strong team. And this sounds a bit different, but outsourcing what is so-called non-strategic. Now, this is where we finally start looking at whatever adventure journey you're trying to take as not just another job, but as a business, okay? So you should spend time working on your business and not in your business, if you understand what I'm saying. Because that only means that you're creating yourself another job rather than actually creating a business. And basically, you're gonna have to hire the right people who will cover the most critical aspects and processes of your business, and outsource what is non-strategic in order to just kind of optimize the leverage that you have at your own disposition and make the absolute most out of your business model. Now, on to number 4, you have to go through the very, very much basic ABC, which is focus on marketing and creating indirect and direct touch points and get your message out quickly. Now, it shouldn't be a surprise to anybody, as you've seen in property, if many of you guys are already in it or some of you guys are starting out, one of the main things about it is the fact that, to no surprise to anyone, your network is your net worth. Marketing your business is the best way for you to scale it. But you have to make sure that when you're ready to kind of increase those numbers, increase that demand, you will be able to deliver a supply that will match that. Now, on to a number 6, which is a bit different than most people think it is. Now, there's several people who are kind of like lone wolves when it comes to their journey. They like to do everything in-house. I'm kind of a person similar to that myself. I really do like catering to each and every single little perfect aspect to make sure that I deliver the most quality. However, I've also realized in the long term with my own first-hand trial and error that finding partners and keeping your business open-ended is one of the best things to do. And that's number 6. Many markets have what they call major players, and there's no reason to outmarket them. You could, either by becoming very unique, but how about instead of trying to outmarket them, which could be very time or cost effective, just very, very expensive to do, try and figure out how to partner up with people like that, with businesses like that. Team up with the bigger fish in order for you to scale up more effectively in the long term. Because working in groups is always better than working alone and trying to squeeze every little penny out of things. And when you keep your business open-ended, so it's not what they call a one-trick pony, that's how you're going to be able to take on different challenges and keep improving indefinitely. Now, I hope you guys find these tips very, very helpful. One thing that I want to emphasize is that you should go out there and just implement them, or think of ways to implement these things in a way that is going to benefit you in the best way possible. Now, let's talk a little bit about what is it that I do, and just so that you understand where I'm coming from. I am a property investment specialist and a so-called deal sourcer, for a bit of a more common term. And I source properties a little bit all over the UK. I tend to avoid areas like London, not because of personal preference, but primarily because of my regional location. And basically, you'll find me between Northampton all the way up to Newcastle when it comes to sourcing. One of the ways that I've scaled up my business, for example, falling in line with what I did, is I started out as just very, very basic deal sourcing. Find them, package them, and that's it. As I started to partner up, I managed to deliver far more complete services to investors, to the point that they can approach me and I will be able to sort out absolutely everything from start to finish. So from the moment that they tell me their budget all the way until they have to rent out their rooms, I can be there each and every single step of the way, instead of just searching for a property that matches their budget and giving it to them, and then they can do whatever they want with it. I can deliver on a development basis, on a mortgage and refinance basis, on a management. So it's very, very important that you apply all the key tips that I've given you today, and you will see that your business is going to flourish absolutely amazingly, even in the next 2 to 3 months, if you do that right. So thank you, everybody.
Thank you, Ledio, for that presentation. Thank you. If you guys are looking to invest up north, we have 2 representatives here. Well, in fact, there's more, but 2 of them who are based up north in Leeds. So if you guys are looking to invest up north, Jasim and Ledio are our company representatives that will be able to help you in that process, in that journey, be able to help you find the right kind of deals, be able to deliver right from the start of not just being able to find those deals, but being able to deliver the whole process till the point where it is managed passively. So you don't have to necessarily manage that yourself. Ledio, could you please share your number and what's in the chat box? I think you just have. Thank you for that. Yeah. And thank you for presenting.
No problem at all.
If you guys want to work
Jack,
with Ledio,
yes,
go ahead.
Before you move on, I just have one thing to add. When you say up north, for us, up north means anything Northampton and onwards is up north for us.
That's right. Yes.
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 Up north doesn't necessarily mean northeast or northwest.
No,
up north is basically anything about Northampton is up north for us.
Yes. So if you guys are looking to invest up north, these are your 2 guys. they would be help you in the process. Thank you once again, Ledio and Jasim.
No
Now,
problem.
I have a company representative who is like a brother. In fact, we all work like a family. But the first time I met him, Jasim, do we have Seti here?
Yeah, we have him here.
So the first time I met Seti, Satdev Kumar, I literally saw someone who was just like me. I saw just another person like me, hardworking, focused, committed, taking responsibility. And I immediately connected at a very deeper emotional level with him. And that's when I invited him to join us. And then he became a representative. He leads a company in East London and manages over 300 properties under his belt. So please help me welcome Satdev Kumar. Seti, bro, can you hear me?
Good afternoon. Thank you very much for the very, very humbling and very warm welcome.
Thank you for being with us and being with, sharing your very valuable time with us here. I'd just love to hear a few. Tell us a little bit more about yourself and Henson Commercials and Estates that we look behind you.
So the business launched 17 years ago in August 2003. Set up by my business partner, the Deep Tour. We've just gone from strength to strength. I mean, like any business and everybody, we go through challenges and we have eye-opening times all the time. Even today, I've literally, because of the situation we're in right now, staff issues, getting people into the office and working together, even though we're blessed with a very big space. But I've got to put my staff safety and everything else, before anything, money, profits and stuff. So I've had to go and meet a HMO inspector today. So I joined at 12. I've had to leave, go and do the HMO inspection and come back. So sorry about
No worries at all. Like I'd share with you guys, he's been in business for 17 years, manages 300 plus properties. In fact, almost every week when I speak with him, he's just taking on a new property, either a HMO or rent to rent. He's taking on something new because he's got loads of resources and connections in the industry, and he's very, very well known. We are also starting in collaboration, sort of a franchise model. So watch out for that in the coming months. But I just wanted to ask you a few questions, Seti. Is that okay?
Yeah, of course. And hi to the Penn family. Sorry, before I forget.
No, we have quite a few members here. So tell us a bit more about, tell us, how has COVID affected the property industry and your business?
Well, COVID, when it came along, I was actually in honeymoon. I got married at the beginning of the year. I was actually on honeymoon, and because I had no media coverage, I wasn't really paying attention to television and media coverages and stuff. So I didn't know what was going on. I came back, and within a week of me coming back here, I was like, something's going on, and I just couldn't work out what was it. Never really come across this before. Then we had to pick up very quickly. So I literally had a week to remotely set us up now individually from home. Phone calls, emails, staff, everybody safe in their own environments, in their space, in their bubbles and stuff. Then COVID came along. We were locked down for, as you all know, for 9 weeks, working from home, setting up, making sure our landlords are getting serviced, making sure our tenants, which are paramount as well, are getting serviced. And just thinking of a different way of doing work and, how do we get around these challenges? Because that's what it was. Literally challenges of tenants having issues. How do we deal with it with the maintenance and contract? And the biggest thing, rents, because they weren't going out to work. So how was we kind of emotionally dealing with that side of things? Because obviously the rents weren't coming in, landlords weren't paying rents. So then obviously we've got, big trouble there in regards to what was going on. So we had a sympathetic way of looking at it, because at the end of the day, Jack, you've got to be humane about things. Money is important to everybody, but at the same time, we had an approach that ring tenants up, speak to them. If their rent was £1,000 for a property, say to them, if you can only afford to give half, put half of that towards your food on your table and covering your expenditures, because you've got to be fair in these circumstances. So that's what we did. And to be honest with you, our highest amount I believe we got to was around about 15% of 300 in rent arrears, and now things are starting to go back to a little bit of normality.
Yeah,
we've gone back to, because we're always around about 5 to 7% maximum ever at one time, and that's usually December, January, but we always know people overindulge, people spend a little bit of extra more money. But it was, that's where we got to, and we've started to go back now. So that's how we've kind of dealt with those challenges of what's going on.
Fantastic. So share your journey with us. How did you start, and how did you build to a point where you manage 300 plus properties now?
A lot of hard work and a lot of graft. So, when we always say it's not about the 100 phone calls or 1,000 phone calls, it's the 10,000 phone calls that you end up making and connecting with people. You want to bring business in, and I think I've been speaking to you every day this week. Somehow me and you've kind of Zoom called it every day this week. And I'm not just saying it for the sake of this call and the presentation from everybody. Hands on heart, I'm show you my diary. I've got Jack written down every day for a Zoom call.
Pretty much every day.
And it's good to connect with the people that you're working along with as well. The journey, it's, looking back now, could I do things differently and stuff? I would love to turn around and know what I kind of went wrong and what we could change right now. But it's just, like they say, hard work, networking. I've done crazy amount of networking over the years. I've got, people must have heard of BNI. It's the biggest business organization in the world. So I was part of an chapter called Integrity, which is based in East London, because we're based in London around here. And I was part of the core group up there. So I was the second person in, helped build the whole business up. And I was part of BNI for 8 years. I'm a big part of also working along with Asian professionals and stuff. And I work hard within that platform as well. And again, just doing things in the right way. And if you say you're doing something, then do it. So under promise, like they say, under promise and over deliver.
Over deliver,
which is key. Yes, which is very much key. And just hard graft. I'm here. I'm here today, and people, I'm a business owner. I'm here today. If I have to be here tomorrow, I'll be here tomorrow. Because if I've said to someone, I'm going to get a report over to you, or I'm going to help you with a situation, we've got to do it. It's got to be done.
Thank you for sharing your wisdom there. We unfortunately do come across people who don't necessarily stick to their word, and that makes life difficult, as well as those people maybe don't realize that it's impossible to scale your business if you don't stick to your word and you deliver what you say you're going to deliver.
Yeah, 100%.
Thank you for sharing your wisdom on that. So share with us, how are you planning to scale your business in the next 3 to 5 years?
So basically, as we know, we're in this situation right now, and there's a lot of letting agencies who are not opening up no more. If they were too small when COVID hit, unfortunately, they don't have the resources and the money basically to come back. So a lot of them are closing up. So we are approaching now letting agencies locally to say, right, if there is a situation coming up now, if there's a situation coming up in the near future where you want to close up for whatever reason, we'll sit down and work out a fair price with yourselves, and we'll take the portfolio over. We're not taking your business over.
No,
you can keep the business. Yeah. We'll take the portfolio over. That's all we're interested in. And again, through the networks and stuff, literally we're getting this out to everybody to say, if you've got a situation, we've got a very workable solution for you, and we'll work with you.
Fantastic. It's all about collaborations. And, when you are scaling your business, one of the main strategies is buying out businesses, which is keys, which is what I did back in the days with one of my businesses as well. I remember we actually bought another business to add on to the existing database that we had. So thank you for sharing that. Okay.
I've got one more thing. I was going to just quickly jump in there to say one more thing. I always say one more thing. I think all the Penn family I always say one more thing. So just the one more thing. An exciting thing that me and you know about.
Exactly.
And I'm going to tease everybody now in the group as well to say, not going to tell them right now, but we're working on something which is going to be powerful, I believe. And I'm going to be honest with you, with Hanson's, it's not something that hasn't come up in my mind previously. It has, and this is going back about 2 years ago. And I've literally opened up that book again to say, right, where did I get to with that point? And how can we now turn around and really juggernaut this out? Because I've got to know, like they say, the family and everybody we work along with. And The trust is there.
We have something exciting coming up, so that will be shared in the next couple of weeks or 3 weeks or so. But thank you. Let me ask you this. This is something that I've been wanting to share. Wanting to ask you. Would you tell us 3 skills, 3 personal and professional skills? So 3 personal and 3 professional skills that you believe helped you get to this point in your life.
Personal skills, I always believe, be humble, be honest, and what you say you must deliver. I would say a personal skill. How do you kind of connect with people, and you're genuinely there to turn around and serve others. It's not all about going there and saying, here's my business card, I'm looking for this.
It's connecting with people. That's what it's all about. Yeah,
definitely.
And 3 professional skills, you reckon?
Professional skills, knowledge is key. This has been embedded in so many books that I've read and so many things that we've done over the years. So what you're doing, make sure you can turn around and literally deliver the service. If you say, I do this, make sure you know from A to Z how you completely deliver that journey to the end user service, who you're providing the service for. IT, making sure, we embrace, don't be afraid of it. I was afraid of it for ages, but embrace technology and, how can it really help you to turn around and make life easier and give you numbers, reports, or whatever you're looking for, or making just generally your business running a lot smoother by embracing IT. Other professional skills, networking. I think just definitely getting out there, being liked. I'm hoping people can turn around and say, yeah, you're a liked individual. Yeah. Bad jokes, but yeah, you're liked by many.
For sure. Yeah.
But yeah, that's what I would say, professional skills.
Fantastic. Share with us, how can you help anyone who's watching this? How can you help them? Where can they find you? How can you help them?
Well, they can find me. I can share my email address. I'm happy to share an email address. I'm on Facebook, so I'm happy to connect on Facebook. Share the email address. I'm part of the Pen team, so
that's right.
You can always pick me up from there. I'm a little bit reluctant. Sorry.
How can you help me or people who are watching this in their journey, in their property journey?
Well, end of the day, what do? 17 years, Hanson's Estates, based in East London, right next to the Crossrail station, 300 managed properties. So we know how to do lettings. We can give everybody a very good solution and, provide the correct information in regards to a letting journey. We've also had, during the COVID situation as well, like rental insurance. So every property that we manage, we have a very, very good product. It's not the cheapest in the market, but it's one that helps us service the landlord correctly. So again, we work along with individuals for that. We do sales. This week has just been phenomenal. We've had 10 sales properties that have come on in a week. Again, it may not sound like it's record breaking, but since like February, March, it's been very, very obviously quiet, lockdown and stuff like that. But it's been this week alone. Usually you average around about 10 sales instructions in a month. We've had them in a week. That just goes to show the boom of where we are right now, property-wise and stuff. I don't think it will last very, very long, but I think towards the end of the year, I think it will carry on. Stamp duty, deduction and saving on that has really kind of helped carry on with the market. So I believe the government are thinking correctly, even though we might think you're just delaying, what we know we're going to go towards. But again, if the market is buoyant and people are, interested in jumping on property market ladders and stuff, it'll keep going,
Fantastic. Where can they find you? Where can they connect with you? Facebook?
Facebook. I'll happily share an email address. WhatsApp. If you want to connect with me on WhatsApp, I'll happily share that.
Do you want to share your WhatsApp number there? So if you're watching this and if you want to, for example, go in the direction of an estate agency, or for that matter, if you're a landlord and looking to let your properties out in East London, or for that matter, if you are looking to sell your property, Seti is your guy who'd be able to help you with that. Thank you, Seti, for sharing your wisdom there. I think I was slightly struggling to get your wisdom out today. I know there is so much wisdom there, but I will definitely give it a try next time, maybe with a bit more creative questions. But no, thank you for being with us here. Thank you for sharing your wisdom.
Thank you very, very much. And I said to you the other day, and I'll repeat exactly what I said when I was speaking to Jack. I said lettings is not very sexy, unfortunately.
No.
There's not much that you can really kind of pump up and juice up about it.
No.
But to be honest with you, the landlords who have turned around and paid off their mortgages are sitting in very good positions.
That's true.
And if it's a long-term goal for you, you can do very, very well from it.
You can do very well because it is a recurring income that you get, because once you've signed a landlord, they're more likely to stay with you if you can provide the right kind of service. So you're getting recurring revenue there.
And they tell others, they'll tell their friends, they'll tell their family members.
Exactly.
And, you know, we discussed lettings as being like the passive income that comes in. And it's true. How you sleep, you are making money.
Exactly. That's what it is. So, yeah, again, thank you once again for being with us and sharing your wisdom. Thank you.
Thank you very much.
Now, we have with us another member of our team. He joined us a few months ago. He has got a banking background. And again, he's an amazing, amazing individual. He's like a brother. He's been performing well lately. He's very, very focused at the moment. And he's mainly focused on sourcing deals in London. I think he's focused mainly on HMOs, a lot more than development deals. So please help me welcome Hemal Shah. Do we have Hemal here?
He's there.
I'm here. Sorry, guys, I've stepped in and out of the call this afternoon. Good afternoon, everybody. Hope you're all well and keeping safe in this weird and wonderful time. Surely we're getting back to normality, I think, which is great. As Jack kindly introduced me, thank you very much. Yeah, my background is very much coming from front office banking background, where we sat between technology and the execution of order flow. So very much asset focused and delivery of the best product for our buy side and sell side at the best price. Ultimately, that's what we want to kind of do for property. So I transitioned across last year, connecting with people like Jack and my fellow Penn family and others through networking events, leveraging knowledge, learning, understanding what needs to be done, how to develop the business model, and found myself kind of focusing around sourcing and how we can deliver the best possible asset for our investors based on their requirements. So it's very much understanding what they need, what they're looking to achieve, and kind of understanding their risk profile and how soon we can get to that point. And from there, we can kind of go out into the market, leverage our network, build relationships with local estate agents. I'm based in Northwest London, so we have many around here. So you kind of build up that relationship, as well as the HMO register. So sending out direct mail shots, emails, you have their telephone numbers, you can engage, and you want to kind of understand where they're at in terms of the management of their portfolios, and see whether you can kind of help them build that rapport. And ultimately that can kind of lead to you positioning yourself ideally with one of the vendors, which I've managed to do successfully, which is great for me, but that person has now given me an access point to their portfolio, which I'm then able to kind of present out to prospective investors. So that's ultimately where we want to get to. Jack alluded to development deals. That's not my focus, but through the relationships that we're building up through agents and vendors, development deals are now starting to filter in. Jack will have to have a sidebar conversation about those in the local area. Those are potentially exciting opportunities. Investors, I think I've already alluded to it. It's about kind of building up the relationship, nurturing those relationships. And with regard, sorry to flip-flop, but going back to the actual appraisal of the deals, we can do that by visiting the site. So in person, been doing a lot more viewings recently, as I'm sure many of you are. And also we can carry out desktop valuations by using comparables on prices of property, the rental returns, and calculating the yields, and also the occupancy of those properties. From my perspective, I think that's me done.
Okay, Hemal. So tell our audience, those who are listening, if they are looking for a HMO in and around London or Northwest London, is that something you can help them with?
Absolutely.
Okay.
We've got currently in the deck, currently got 7 opportunities, ranging from Pinner, there's actually one in King's Cross. We've got one in Pinner, one in Northwood. So yeah, feel free to drop me a line.
So where can they find you? Would you mind sharing your number so they can WhatsApp you if they are looking for any HMOs in and around London or Northwest London? Would you mind sharing your number with us?
Absolutely, there you go.
And at the same time, where can they connect with you on social media if they want to make that decision at some later stage?
I'm on Facebook. I need to be more active, I think is the word, on Facebook, and I'm on Instagram, but I use LinkedIn a lot. That's my platform of choice.
And you are with Hemal Shah on LinkedIn, is that correct?
That's correct.
So if you guys are looking to invest in Northwest London in HMOs, Hemal is your guy. He's a PN representative and a part of the family, and he's an amazing, amazing guy to work with. So if you're looking to invest with Hemal, you can send him a message. He's left his number there.
Share my email address as well.
Yep. Thank you, Hemal, for being with us. Thank you once again. And now I am again excited for our last speaker of the day. And he's again an amazing, amazing guy. He joined us back in November 2019. When I met him the first time, this was before that, I realized the potential there and then. He's committed, he's focused on one strategy, which I keep insisting everyone on to stick to one strategy till it's profitable enough, and then move on to the next one. But he's focused on one strategy, and that is rent to rent. And he, like I said, he's an amazing, amazing guy to work with, and like a brother. So please help me welcome Muzi. Muzi, bro, can you hear me?
Yes, I can indeed. Can you hear me?
Next time you meet me, maybe you can tell me how to pronounce your name correctly. Not your first name, as in the sense your nickname, but your full name. But no, thank you for being with us here, Muzi. Tell us a bit more about your journey for the past 12 months.
Thank you very much, Jack. Thank you very much. Yeah, so my name is Muzi. I'm actually quite excited that on the group there's quite a lot of Zimbabweans, my Zimbabwean family. So excited. Yeah. And yeah, my full name is actually Muzi Ngayenduna. To the Zimbabwean guys, that's not going to be difficult. For everyone else, it might be a bit of a mouthful. So I shorten it just to Muzi to make it simpler for everyone else. So yeah, like Jack mentioned, we met up sometime in I think it was about June, July last year.
That's right.
First time, yeah. And I came to London from the West Midlands just to come and listen to you speak on one of the networking events that I'd come to, which coincidentally I actually spoke at a couple of weeks ago as well. So fantastic.
That was exciting, yeah.
It was really exciting. So yeah, I focus on rent to rent from the time that we started our property journey, which was early last year. Focused on rent to rent, mainly on the serviced accommodation side. We do have a couple of HMOs as well, and we're based in the West Midlands. Our units are in the West Midlands, Northampton, Coventry, Birmingham, and a couple in Nottingham as well. So yeah, that is basically our background.
How many do you have at this moment of time?
So as it stands now, we've got 9, working on another 3 that are in the pipeline, and hopefully we'll get them finished off and closed off by the end of September latest.
Fantastic, fantastic. Mm-hmm. So tell us a bit more about yourself.
Yeah, like I mentioned already, I'm from Zimbabwe. I came to England back in 2004. My career path started on the engineering side, manufacturing engineering, did my studies in Coventry. Initially as an apprentice, went to college for it, and also went to Coventry University, got my qualifications back in 2013. And then I started working for automotive companies. I think I've worked for about 8 of them, just moving from one job to another, still following that career path. Still currently employed actually in an automotive company and doing property at the same time. So as of early last year, we decided that we wanted to try something else rather than just rely on a 9-to-5 job role type thing, where if anything were to happen to me, the money stops. So we just wanted to create a bit of a business on the side, something that could take care of us even if we didn't have to wake up in the morning to go to work. So this is when I started doing the property thing, networked left, right, and center really quite a lot, put in a lot of hours, did a lot of property training, and in all the movements I was doing in terms of networking, then obviously met yourself at some point mid-year last year, and acquired our very first rent-to-rent property around August, September last year. And since then, it's just been going crazy, and we've been picking up from then on.
Fantastic. So share with us a few tips about rent-to-rent.
Yeah, what I wanted to talk to you about today is following a few conversations I've had with people that are actually on this call today. And this is something that I think quite a lot of people miss out on. A lot of people start off by going to property training companies, and we all know quite a lot about how the property industry is advertised by property training companies and how it's all rosy. You can be a millionaire in a couple of months, basically. And I just wanted to bring people back down to reality and just point out a few things that you need to look out for. So I just wanted to look through 5 points mainly of what to consider when you're acquiring a rent-to-rent. And some of these will be obvious to people who've been in the property industry. Some of these might not. So I'll just go through them one by one. The first one is strategy. Now, this is not necessarily going to be in the order of what you need to look out for. It's just 5 points that I think you all need to consider if you are going to go into rent-to-rent business. The first one is strategy, and the word strategy has been used quite a lot actually on the call today. And there's some really valid points mentioned by Sue, mentioned by Paul and Stephen as well. And it's really important. And when I say strategy, I'm looking at rent-to-rent is usually looked at as a strategy, but we don't look at it as a strategy. We look at it as a tool to acquire a property. Once you've acquired the property, what you then do with it is the strategy. So are you going to use it for service accommodation? Are you going to be doing it as an HMO, a single let, or maybe social housing like Sue was talking about earlier on? So deciding what your strategy is going to be is important before you actually go out to do some work to find these rent-to-rents, because it will determine what you need to look out for. So the second point is the location. Now the location is in 2 ways. Firstly, once you know what your strategy is, you want to pick a location that aligns to that strategy. And also the second part of the location bit is dependent on whether you want to manage stuff yourself or you want to make it hands-free. You need to decide on your location. Obviously, if you're going to be managing stuff yourself, you want it to be close to where you live, because otherwise you're going to be spending quite a lot of time traveling. I mean, rent-to-rent works really well up north. And if you live in London, you don't want to be doing the management side because you're going to be traveling unrealistically. So location is something that you need to consider. The third one is your time and availability. Dependent on what strategy you pick, some strategies are really time consuming. Service accommodation is one of the most time consuming ones because you've got guests coming in and out quite often and you have to deal with them as you go along. With the other strategies where you get one tenant that moves in and it's a few months before they have to move out and you find another tenant, that's less time consuming. So you need to just sort of consider what it is that you want to do, how much time you have to be able to ascertain whether your business is going to work with what you can do. And I think that's really important to look at, especially if you're working at the same time as trying to run a property business. The fourth part is your threshold. Now, this is an interesting one because we discussed this quite a lot, especially with deal packages, where what does a good deal actually look like? Because that in many cases is quite opinionated. Is a good deal, is £300 a month a good deal, or is £1,000 a month a good deal? With some people, they will say, I won't touch anything that makes any less than 500, or I won't touch anything that makes less than 800. And that's how they determine what a good deal looks like. With some people, if you find a deal that gives you £500 a month passive, someone would look at it and think that is amazing. And then the next person could come and say, £500 is not enough for me. It's not a good deal. So you need to decide what your threshold is before you actually go in. You tell yourself, okay, is £300 a month enough for me? Am I okay with one deal giving me £300 a month net profit? And if 300 is fine with you, at least when you start looking at these deals and doing your due diligence, doing your calculations, you can start ticking off to say, yes, this will give me £300 a month. That's what I'm looking for. Or no, it won't. So I'm not going to be touching that. So you need to have your threshold, and your threshold needs to be based on you, not necessarily what other people say, because people will tell you that I'm not going to touch anything that doesn't make me £1,000 or more. And if you go with that, you'll be looking for it forever and miss out on some really good opportunities. And yet you don't actually need 1,000. You're probably okay with 500. You're probably okay with 600. So decide on what your threshold is before you actually go for it. And the last one that not many people speak about is your personality and character. So with whatever strategy you pick out on to say, I'm going to take this rent to rent and I'm going to run it as a service accommodation, but you're not really a people person. You don't like talking to people every day, and it doesn't quite align with what you do. You've just created a second job that you're absolutely going to hate because you don't want to deal with people left, right, and center. You need to allocate yourself or align yourself with the strategy that meets up with your personality. There's something that Sue mentioned at the start of the call where she was talking about the fact that if you find something that you really enjoy and you get paid for it, you'll never work a day in your life. That's the whole point of aligning your personality, your character to what you're actually doing right now. And that's a point that I think is really important that not many people consider. A lot of people that I've spoken to look at it and think, well, he's doing that. He's making quite a lot of money. I'm just going to go do that. And you don't consider a lot of other aspects that go besides just the money that they're making. And then you get to that point, even if you make that money, you're not enjoying yourself because it doesn't align with what you believe in. It doesn't align with what your personality and character is. It doesn't align with your time and availability. It just becomes an absolute nightmare. So it's something that I think you need to consider when you're actually going for any deal really, besides just the rent to rent. And those are the 5 points that I just wanted to highlight in terms of rent to rent acquisition, so to speak. And Jack, there's a point, there's a question that someone asked. I think it was a guy or someone called Denua, I think, who was asking about finding rent to rent in a certain area.
Yes.
I just wanted to add on top of these points in terms of finding rent to rent deals. That from my point of view, there's 3 ways to find them. You're either going to find them in an agent, with an agent, or you're going to find them directly to the landlord or whoever it is that you're going to be working with, or you're going to find them through someone else. Now, through the agent, obviously, you're going to need to call the agents. You're going to need to visit the agent and talk to them. And if it's your very first time, I would recommend you go and practice communication with agents outside of your area. Once you've decided what your area is, go somewhere else, speak to about 10 agents, get comfortable speaking to agents, and then come back into your own area when you're comfortable and create good rapport with these agents, because that's where a lot of your deals are going to be coming from. When it comes to directly to a landlord, there's different ways of doing it. You can use platforms like Gumtree, where landlords actually advertise properties themselves. You can send direct to vendor letters. You can send leaflets that will go directly to these properties, and you speak to them directly. And then the last one is through other people, and that comes mainly from networking. quite a few people here who've spoken have spoken a lot about networking. Networking is really important. A lot of opportunities come from that. A lot of education comes from that. And leveraging on other people's resources, leveraging on other people's knowledge, it all comes from networking. And in every network event that you go to, add as much value as possible, and you'll be surprised how much comes back to you. And then also making sure you tell everyone what you do. Don't be secretive. Tell everyone what you're doing, and you'll be surprised how many opportunities will come your way. And that, from my point of view, is the three main things that you need to focus on if you're finding a deal, and that's in any location. And I'm hoping that covers that aspect of the question that was asked earlier on.
Thank you, Muzi, for sharing that wisdom and knowledge with us. It's a pleasure to have you in the family and at this event. Where can people find you? How can they connect with you? How can they work with you?
Yeah, I'm going to drop my contact details on the chat. But like many people, I'm everywhere on social media. The main platform that you'll find me on is Facebook. I'll drop my number. I communicate quite well on WhatsApp. It's a lot quicker that way. We also have a Facebook page because we're based in Coventry. It's got Property Entrepreneurs Network Coventry, PEN Coventry on Facebook. Please feel free to join that group. We share a lot of content and opportunities on there as well. And we also have another page for my Zimbabwean family, the Zim Property Investors, for anyone who would want to join us. I will put that information in the chat. But yeah, I am on social media and I'm pretty easy to get hold of.
Fantastic. If you would like to share your number in the chat box, and people can connect with you if they want to work with you, if they want to learn from you, and then we can go from there. Thank you once again for being with us here. And, you know, it's just, it's amazing to have you in the family.
No problem. Thank you very much.
Thank
Jack.
you. Thank you. All right, guys, before we end of this event today, I just want to share something with you that will help you in your journey, which is aggressive patience. What do I mean by aggressive patience? That means that when you start a business, you got to be very, very patient to get the traction, to be able to scale your business. But that patience needs to be aggressive. So what do I mean by that? Which means aggressive action. I don't mean you go and fight. What I mean by that is that you're taking action very, very fast. You're moving very fast behind the scene, and you are doing whatever it takes to be able to scale your business. That's what I call passive patience, patient aggression, or patiently aggressive. And that's what a lot of people don't tend to see behind successful people. I think some of the family members here probably see me sometimes very, very patient when things don't happen, and very aggressively working behind the scene. And that's something that, like I said, when you start to study and observe very, very successful people, you're going to see that they're very patiently aggressive. Aggressive is the action taking. So they're very, very fast at taking action, implementing what they know. And they're very, very patient when it comes to opportunities and waiting for the right kind of opportunities and then analyzing and taking them on. That's from me. If again, one of the gifts that we gave earlier in the mid session was something that we charge for. We give sessions out and we charge for that, but I'm happy to give you a session for about 15 minutes to half an hour, depending on your personal circumstances. Happy to give you that session for absolutely free from PEN to you. If you'd like that session, send me a WhatsApp message on the number that I'm going to leave on the chat. Send me a WhatsApp message with a word called session, and we will book you in and we will go from there. Hopefully this event has been of some value to you. Hope you enjoyed in the process. And if we made any errors or mistakes, please do forgive us for that. Our aim always is to add as much value to your journey and help you being able to grow your portfolio and your property business. So yeah, have an absolutely amazing day, and I'll see you guys very, very soon. Take care. Bye for now.